Very good morning, everyone. Everyone, first, can you let me know is the voice is audible or not? Is everything is clear? Audio, video, everything is okay? Just reply fast. Now, today in this revision lecture, means today is the day number 2 for CA Inter Advanced Accounting Revision. Last day we have already taken 4 accounting standard. What was the 4 accounting standard? AS 10, AS 16, AS 26 and AS 12. These 4 accounting standard already we have taken. Today we'll take cash flow statement AS 3, then AS 2 and AS 1. Correct? Only to inform you that already I have said that day 1, day 2, this together I will take one test number 1 for all the chapter whatever we have taken for day 1 and day 2. Okay, the test will be uploaded by, I will say, by the end of the class. Once the class will be over, the test one will be uploaded and you can download the test from our Telegram channel. Correct? Are you getting? The link has been already given, but till now the test has not been uploaded. So once the today class will be over, we'll upload test number 1. You can download the test number 1, and once you think that yes, you have practiced all the question of all this chapter, then only write down the test number 1. Don't first complete all the question. Means after revision class day 1, day 2, I have already informed you that you need to do all the balance questions by your own. Whatever I am not taking the class, the balance question you are supposed to do by your own. Correct? So once you feel that you have already completed the self practice for day 1 and day 2 chapter, then download the test number 1, write down the test number 1. Understood? Of course, we'll also upload the suggested solution for that. So if you once you have written a test, download the test suggested solution and then cross verify what is the answer where you have done the mistake. Got this point? Yes sir. So can we start today cash flow statement? Are you all ready? So let us start cash flow statement AS3. First we'll do the content, then we'll do the questions to understand how to solve the cash flow statement question. Of course, this is an important chapter. A question, I will say, from 10 to 12 marks can be asked from this particular topic. If they are not asking the descriptive question, so of course they will ask MCQs, or the case study based question may be also asked from this particular topic. So what is the meaning of cash flow statement? Can I say cash flow statement is nothing but the inflow and the outflow of cash and cash equivalent? Inflow and outflow of cash and cash equivalent under 3 activities. What are 3 activities? First is operating activities, second is investing activities, and the third is what? Third is financing activities. Now we need to understand what is the meaning of cash and cash equivalent, what is the meaning of operating activities, what is the meaning of investing activities, and what is the meaning of financing activities. So what do you mean by operating activities? Operating activities is very simple. Any principal revenue producing activities of the entities, means the activities from which we are generating revenue, that will be considered as operating activities. Understood? Now revenue is already defined under AS9. So if you have understood the meaning of revenue as per AS9, so of course you know the activities which you undertaken which you will undertake to generate what revenue. So any principal revenue producing activities, for example sale of goods, purchase of goods, and whatever expenses you are incurred to generate that sales, for example rent expense, payment to employee, payment for any other operating expenses, will be considered as operating activities. Got this point? Yes sir. What do you mean by investing activities? Investing activities means acquisition and disposal of long term asset. acquisition and disposal of long-term asset. Long-term asset means what? Property, plant and equipment, investment property, intangible asset. This become the long-term asset. So acquisition and disposal of long-term asset in fixed asset and investment. So investment, when you do acquisition and disposal of investment, but other than cash and cash equivalent, there are some investment which can be classified as cash and cash equivalent. The purchase and sale of cash equivalent will not be considered as investing activities. To be careful about that particular point. Understood? The acquisition and disposal acquisition and disposal of long-term asset in fixed asset and investment other than cash equivalent will be considered as investing activities. We'll do more analysis on that. First, let us understand the meaning of all the activities, then we'll come to the point. Understood? Now coming to the financing activities. Financing activities means what? Any activities which changes the scope, any any activity which changes the composition, I will say composition of either equity or and borrowing, equity and borrowing of the entity will be known as what? Financing activities. So activities that changes the composition of equity. Equity means, can I say, equity share capital, preference share capital. So any changes in the equity and preference share capital by, for example, issue of equity shares, redemption of preference shares, buyback of equity shares, this will be considered as financing activities. And borrowing of the entity, so if you have taken loan, if you have redeemed the loan, this will be also what? Financing activities. When I am saying borrowing, so borrowing will include both short term borrowing as well as what? Long term borrowing, as well as long term borrowing. So any changes in the long term borrowing as well as short term borrowing will be considered as financing activities. So you have understood what are operating activities, investing activities and financing activities. Chalega? Correct? Understood? Yes, sir. Sai Pratap, you can contact our team for that. Write down our team number 8766. Write down the team number is what? 8766246684. Chalega? Contact the team for that particular region. Okay, sir? Yes, sir. Now, what do you mean by cash and cash equivalent? So right now you have understood that any movement in cash and cash equivalent under these three activities will be considered as what? Cash flow statement. But the statement which shows the movement of cash and cash equivalent under these three activities will be known as what? Cash flow statement. So what do you mean by cash and cash equivalent? But before that, there are some activities which are not, just try to understand, there are some activities which are not principal revenue producing activities, and they are not investing and financing activities also. I'll just give a simple example. Suppose sale of newspaper. Normally we purchase always newspaper for reading, and can I say once there will be used lot of newspaper, will sell it and some scrap value will be realized. So sale proceed from the sale of newspaper, can I say it is not a principal revenue producing activities, it is not an investing activities, it is not a financing activities. So what AS3 says that if it is not an investing activities or financing activities, then it will be classified as operating activities, even though it is not a principal revenue producing activities. Chalega? So what they are saying, and other activities which are not investing and financing activities will be also operating activities, even though it is not from the principal revenue producing activities. Got this point? Now what do you mean by cash and cash equivalent? What do you mean by cash and cash equivalent? So there are two words, cash and cash equivalent. So what do you mean by cash? Cash include cash in hand including foreign currency. Means if you have some foreign currency, that will be also considered as cash. So cash will include cash in hand as well as foreign currency, and it will also include demand deposit with bank. Means any bank balance in current account, any bank balance in current account will be what? Any bank balance in current account will be also cash. So can I say cash means cash in hand including foreign currency, and any deposit with any demand deposit with bank, which is nothing but balance in current account. Now whenever we say current account, you know that current account may have debit balance and the current account may have credit balance. Let me explain you. Just try to understand what I am saying. Just try to understand. Suppose current account have credit balance as well as debit balance. Now if it has debit balance, so no doubt can I say it is nothing but cash and cash equivalent. But if it is credit balance, it is having credit balance, so it become bank overdraft. It become bank overdraft. Now bank overdraft is nothing but a current liability. It will be current liability in the balance sheet. It will be current liability in the balance sheet. Now one doubt will come, sir, whether bank overdraft which is due to the credit balance in current account, whether it will be a part of cash and cash equivalent or whether it is not a part of cash and cash equivalent. So for this actually no clarification, no guidance, no guidance has been given under AS3. No guidance has been given under AS3. Understood? Means the AS3 is totally silent about this. AS3 is totally silent about this. Means now let me explain. Now can I say whenever we say bank overdraft, so bank overdraft are of two type. Bank overdraft are of two type. It is, can I say, it is the credit balance. It can be credit balance in current account. It can be credit balance in current account, or it can be bank overdraft or cash credit facility. Cash credit facility. Understood? And this bank overdraft or cash credit facility means which is not a credit balance of current account, means you have taken some overdraft loan, you have taken some loan in the form of bank overdraft facility. This will be always treated as financing activity. This will be always treated as financing activity. And doubt will come about credit balance in current account. Doubt will come for credit balance in current account, whether it is a cash equivalent, means whether it should be deducted from cash equivalent, whether it will be considered as financing activity. So AS3 is totally silent. So therefore normally whenever bank overdraft is given the question, we'll always assume it is financing activity and the question is silent, because this type of question they will never ask in exam. Because why AS3 is silent regarding this? AS3 is silent regarding this. As per practical understanding, can I say it should be deducted from cash and cash equivalent only, because this is nothing but demand deposit with bank, and demand deposit with bank, whether negative balance or positive balance, should be a part of cash and cash equivalent. Understood? But question in exam question they will not ask this type of point. But if question is silent, if question is silent, always assume it is financing activity. It is which activity? Financing activities. Means we will consider it as a loan. Loan means if the bank overdraft is increasing, means we have taken the loan. If bank overdraft is decreasing, means we have repaid the loan. Correct? So this will be inflow and outflow under which activities? Financing activities. Understood this point? Correct. But if suppose the chances are very less. Suppose they have given credit balance in current account. They have asked this particular point, you have a credit balance in current account, then it should be deducted. It should be deducted from cash and cash equivalent. It should be deducted from cash and cash equivalent. Till now no question of this nature have been asked in CA inter exam. No question of this nature have been asked in CA inter exam. But suppose specifically they have mentioned we have a credit balance in current account, then this is nothing but cash equivalent. It will become negative cash equivalent. Understood this point? I hope you have understood. Correct? Chalo. Now let us come to what do you mean by cash? What do you mean by cash equivalent? So we have understood cash. Cash means what? Cash in hand, and demand deposit with bank, that is current account. What do you mean by cash equivalent? So cash equivalent means what? Which is nothing but equal to cash. So what is the definition of cash equivalent? These are nothing but short term highly liquid investment. So it is nothing but investment. So cash equivalent is short term highly liquid investment that are readily converted to the known amount of cash, and which are subject to insignificant risk of the changes in the value. Means can I say there are four conditions. First, it must be short term. Now sir, what do you mean by short term? Short term means 3 months or less than 3 months from the date of acquisition. Means their maturity period should be 3 months or less than 3 months from the date of acquisition. Once you have acquired it, so it can be realized within 3 months, 3 months or less than 3 months from the date of acquisition, correct? So what do you mean by cash equivalent? Can you repeat with me? Cash equivalent means short term highly liquid investment. Highly liquid means it can be easily sold in the market, it can be easily sold in the market, it can be easily realized in the market. Highly liquid investment that are readily converted to known amount. Known amount means the amount of realization known at the beginning only. Amount of realization is known at the beginning, that are readily converted to the known amount of cash, which are subject to insignificant risk, means there will be no, or I will say very little changes in the value. This become the definition of cash equivalent. Can you repeat with me? Cash equivalent are short term highly liquid investment that are readily converted to the known amount of cash, which are subject to insignificant risk of changes in value. The best example of this is what? Fixed deposit with a maturity period of 3 months or less than 3 months from the date of acquisition. The best examples is what? FD having a maturity period of 3 months or less than 3 months from the date of acquisition. Can I say? So this will meet all the condition. But if there is any FD having a maturity period of more than 3 months, then it is not a cash equivalent. Then it will be considered as investing activities. So any FD having a maturity of 3 months or less than 3 months from the date of acquisition will become cash equivalent. One more example I can say, suppose you have done investment in redeemable preference shares, which are redeemable within 3 months from the date of acquisition. So can I say all the points will be satisfied, because it is nothing but short term highly liquid which is redeemable within 3 months. And can I say the redemption value is known at the beginning only, ki at what amount you redeem, that will be always agreed. So it will be readily converted into known amount of cash, and that is not subject to that is not subject to the changes in value, because the value is not going to change. Therefore it will be also classified as cash equivalent. But if I say investment in equity shares which are realizable within 3 months, can I say it is subject to high risk of changes in value, and therefore it will never be cash equivalent. So any investment in equity shares will be always considered as investing activities. Understood? Have you understood? Means when I am saying investment, investment as per AS, it can be current investment, it can be long term investment. As per AS13, it can be current investment, it can be long term investment. Can you see the purchase and sale of long term investment will be always classified as investing activities? This will be always investing activities. But if it is current, can you say it can be either cash equivalent, it may meet the definition of cash equivalent, or it can be other than what? It can be other than cash equivalent. If it is other than cash equivalent, then it will be investing activities. But if it is cash equivalent, then purchase and sale of that cash equivalent is not investing activity. Then it is a cash equivalent, then it will be shown as cash equivalent under the cash flow statement. Understood? Is fine. This clarification done. So when it become cash equivalent, it need to meet the definition of what? Cash equivalent. Got this point? Yes sir, correct. Now coming to the, once we have understood the meaning of cash and cash equivalent, operating activities, investing activities, financing activity, let me first take one question to understand whether you have understood this or not. So of course I have taken one assumption that you have done this chapter initially. Now only you are doing the revision. So of course you can now answer which one is operating activities, which one is investing activities, which one is financing activities, and which one is cash equivalent. Let us do purchase of machinery. Everyone will say, can I say investing activity? Proceed from issue of equity share capital, financing activity. Cash sales, operating activity. Proceed from long term borrowing, financing activity. Check collected from trade receivable, operating activity. Check received from, cash received from trade receivable, operating activity. Trading commission received, trading commission means operating. So this is also what? Operating activities. Purchase of investment, if nothing is given, we'll always assume it is not a cash equivalent. If they have said purchase of investment, nothing is given, so it cannot be cash equivalent. Chalega? So this will be investing activity. Redemption of preference shares, it will be financing activity. Chalega? Cash purchase, operating activities. Proceed from sale of investment, investing activity. purchase of goodwill. Goodwill means long term asset. Long term asset means what? It become investing activities. Cash paid to suppliers, operating activities. Correct. Interim dividend paid, any interim dividend paid. Can I say dividend is paid on share capital, and share capital is what? Our financing activity. So this will be also financing activities. Wages and salaries paid, this will be operating activities. Proceed from sale of patent. Patent is an intangible asset, long term asset, therefore this will be investing activities. Interest received on debenture held as investment. So if you are receiving some interest on investment, because investment is investing activities, therefore interest received will be also investing activities. So this will be also investing activities. Interest paid on long term borrowing, because long term borrowing is a financing activities, so any interest paid on long term borrowing will be also financing activities. This will be financing activities. Office and admin expense paid, operating activities. Manufacturing overhead paid, operating activities. Dividend received on shares held as investment. So if investment is an investing activities, means purchase of investment is investing activities, so any dividend received on the shares held as investment will be also investing activities. Rent received on property held as investment, that property is an investment property, investing activities, so any rent received means any income generated from that investment will be also investing activities. Selling and distribution expense paid, operating activities. Income tax paid, income tax paid, just try to understand, if the question is silent, nothing has been given, then this will be an operating activities. However, it may sometime may become investing or financing activities also, we'll discuss in the later part. If nothing is given, this will be operating activities. Dividend paid on preference shares. Once again, preference shares is the preference shares will be any issue or redemption of preference shares will be financing activities, so any dividend paid on that activities will be also financing activities. Underwriting commission paid, can I say underwriting commission paid is on issue of shares or debentures etc., because they are financing activities, so underwriting commission paid will be also financing activities. Correct. Rent paid is an operating activities. Brokerage paid on purchase of investment. Now once you purchase investment, so any brokerage paid on purchase of investment will be an investing activities. Bank overdraft, I said if question is silent, bank overdraft question is silent, it will be a financing activities, it will be a financing activities. Chalega. Cash credit and bank overdraft same are same, so cash credit is nothing but bank overdraft, so this will be also a financing activities. Short term deposit means you have made some short term deposit, so deposit means you have given some deposit to other, means you have made some deposit, so it is what investing activities, it will be an investing activities. Short term deposit will be an investing activities. Correct. Now one doubt may come, sir, deposit has been given or received, this is doubt. So I have right now I am assumed that this is deposit given. If received, can I say it is one type of borrowing. If you have received some deposit, it become one type of borrowing. So if nothing has been given, I have assumed deposit has been given, deposit has been given. Normally we deposit somewhere na, correct, so that become what, your investing activities. Highly liquid marketable securities without risk of changes in value. Now whenever question is silent and question has given marketable securities and nothing has been given, we'll assume it is cash and cash equivalent. So just write down, if they have given marketable securities and question is silent, from exam point of view, we will assume it is cash equivalent. However, in this, so they have already mentioned highly liquid and without risk of changes in value, so this will be what, your cash equivalent, it will be a cash equivalent. Chalega. Refund of income tax received, so income tax payment is an operating activity, so if you have received the refund, that will be also your operating activities. So I hope in this discussion you have understood how to classify any activities as operating, investing or financing activities. Chalega. Boliye. This much you understood? Let me take one more example. This question was asked in exam. This type of question can be asked for 5 marks. What they have given: Intelligent Limited is a non-financial company, has the following entries in the bank account. It has sought your advice on the treatment of the same for the preparing of cash flow statement. Loan and advance given. Given means you have given loan advance to the following and interest earned on them to the supplier. Can you see, if you have given some loan advance to supplier, supplier is nothing but related to operating, this will be an operating activities. To employee, can you see, employees are also engaged in what, employees are also engaged in operation. So you have, if you have given some advance to employee, that will be also an operating activities, correct, because employees are part of operating activities, chalega. But two is subsidiary companies, then this will become an investing activities, then it will become an investing activities, correct. Last point of cash and cash equivalent, which last point do you want to, point number FF, you want point number FF, fast. Yes, sir. Once again, I am coming to highly liquid marketable securities. In this, though, it is given highly liquid marketable securities. Means you have done some investment in marketable securities. Marketable securities means which can be purchased and sold in the market. That is known as marketable securities. Correct now. Without risk of changes in value. So can you see it will satisfy? It is short term. Means we are assuming right now it is short term. Marketable securities means it can be sold or purchased. So it becomes short term. You can sell it. Correct now. So we are assuming it is short term. Highly liquid is given without changes in value. So of course it will meet the definition of cash equivalent. So right now the question is not silent, it has given clear indication that it is a cash equivalent. But what I am saying, suppose in the question they have given marketable securities and nothing has been given, so from exam point of view we will assume it is what, cash equivalent. From exam point of view, if the question is silent about marketable securities, from exam point of view what will assume, it is a cash equivalent and will not consider it as investing activities. Now you have understood, Naveen? Naveen, have you understood? Respond fast. If risk is high, then it is not a cash equivalent. Now, of course, if the without risk of changes in value, it is given. Suppose the risk is high, then it is not a cash equivalent. Then it will be in investing activities. I am saying if the question is silent, question is given only marketable securities, and nothing has been given, we'll assume from exam point of view that it is cash equivalent. That is, I am saying assumption when the question is silent. Understood? Okay, sir. Now come to question 9. I hope the point number 1 you have understood. Come to point number 2. Investment made in subsidiary Smart Limited and dividend received. Whenever you have made some investment in subsidiary, it is nothing but investing activities. So any investment made and the dividend received will be what? Investing activities. Dividend paid of for the year, any dividend paid, this will be financing activities. Dividend paid on share capital, this will be financing activities. TDS on interest income earned on investment made, just try to now, because you have done income tax also, so you know about TDS. So TDS tax has been deducted on interest income. So interest income is an investing activity, so any TDS deducted on that, that will be also investing activities. Investing activities. TDS on interest earned on advance given to supplier. Now you only say any advance given to supplier is an investing activities or operating activities. So that is an operating activities. So any TDS deducted on interest received, interest earned on advance given to supplier will be an operating activities. Have you understood this point number 4 and point number 5? Correct. Insurance claim received against the loss of fixed asset by fire. So can you see, just a fixed asset is what? Property, plant and equipment. So any insurance claim received on against the loss of fixed asset by fire will be an investing activities, but under investing activities this will be disclosed as extraordinary item. Abhi we have not done extraordinary item. I will explain you what is the extraordinary item in a letter concept. But can you see, insurance claim received against the loss of fixed asset. So fixed asset is what? Fixed asset is what? Your investing activities, means long term asset. Any insurance claim received will be what? Investing activities. But suppose they have said insurance claim received against the loss of inventory, then that will become operating activities. Under operating activities, that will be extraordinary item. What is the extraordinary item? I am coming. Chalega. So you can see extraordinary item to be shown under a separate heading as cash inflow from investing activities. I am coming to extraordinary item right now. Up to this, any doubt? Now coming to the cash flow statement. Now cash flow statement will be prepared under 3 activities. First is operating activities, second is investing activities, and third is financing activities. Now for investing and financing activities, what our AS3 says that we need to use always direct method. So for investing and financing activities, will always use direct method for the presentation of cash inflow and outflow. Means can I say in investing activities and financing activities, write down cash inflow minus cash outflow, cash inflow minus cash outflow, that become what your direct activities. I'm coming soon in the presentation part, but you have understood. But operating activity, they have given two choice, either we can use direct method or indirect method. Means there are two options given by AS3. Key operating activities can be either prepared by using direct method or indirect method. Direct method, once again, very simple, it is cash inflow minus cash outflow, means cash inflow from operating activities minus cash outflow from operating activities. But indirect method, we need to make some adjustment to profit before tax, which has been calculated from a statement of profit and loss. Means what is this adjustment, we need to explain. But PBT, profit before tax, will be converted into cash flow from operating activities. Now how to convert PBT to cash flow from operating activities, that we need to revise. Chalega. Means can I say for operating activities we have two method, direct method, indirect method. For investing and financing activity we have only direct method. Now there is one point ki AS3 has given an option, but as per SEBI guidelines, listed company, because SEBI is applicable listed company. Now you all know about listed company. Listed company are those company whose shares and securities are listed in the recognized stock exchange of the India. Correct? Yes, sir. So any listed company, they need to prepare cash flow statement only by using indirect method. Indirect method. Means can I say, because there is a specific guidelines under SEBI, so listed company cannot present cash flow from operating activities under direct method, they need to use only indirect method. If there is an unlisted company and they are preparing cash flow statement, for them there is an option, they can use direct method or indirect method. So how to understand from exam point of view whether to use direct and indirect method? Write down, write down, write down. Correct. Means from exam point of view, if question specify direct or indirect method, then use as per requirement of the question. Use as per the requirement of question. Means they have said direct method, now you are following indirect method, under 0 marks. If they are saying indirect method and you are following direct method, under 0 marks. Correct? So if they have already specified direct and indirect method, do as per the information given the question. So therefore please carefully read at the end what is the requirement of the question. Normally at the end they will write down very, I will say at the end they will give use direct method or indirect method. Be careful about that. Be careful about that. Second, if question is silent, can I say in this normally a doubt will come? In this normally a doubt will come. So just write down. If only balance sheet of company is given with additional information, only balance sheet of company is given with additional information, in this case you can use only the indirect method. Means direct method can't be applied. In this direct method can't be applied because they will not give any information about SOPL, so you can't use indirect method. Sorry, you can't use direct method, you need to use only indirect method. So only balance sheet of the company has been given with additional information, only you can use indirect method. In this you can't use direct method. Chalega? Second, I am writing here. Suppose in the question balance sheet with SOPL, SOPL means statement of profit and loss, is given. Balance sheet with SOPL is given. Now in this you can use both direct or indirect method. You can use direct or indirect method. Understood? As per your choice. If the question is silent. So whenever a question of balance in the question they have given balance sheet, opening balance sheet, closing balance sheet with SOPL also. So this type of question can be done either by using direct method or indirect method. I will say use accordingly to you, because the question is silent. You can go for direct method, you can go for indirect method. Correct now. But if they have mentioned listed company, be careful, because already we have said listed company. So for listed company, can I say indirect method is only applied to use indirect method? But again, the question might not inform you whether it is a listed company or unlisted company. In that, of course, doubt will come. Direct to indirect method, I will say go as per your choice. Go as per your choice. However, indirect method will be more easy from direct method from my point of view, because direct method, a lot of calculations are required. Lot of calculations are required. Understood this mind? This is clear. This is clear. Now let us come to format of cash flow statement. Now coming to the format of cash flow statement, the format is very simple. First we write down cash flow from operating activities, then cash flow from investing activities, then cash flow from financing activities. This will be the total of these three. So this will be considered as increase or decrease in cash and cash equivalent during the period. So this will be increase or decrease, or you can say changes in cash and cash equivalent during the year. Then we'll add opening cash and cash equivalent. We'll add opening cash and cash equivalent, and the sum total of these two will be equal to closing cash and cash equivalent. If it is not matching with the closing cash and cash equivalent, it means you are doing some mistake. There is some mistake, you need to rectify it. Chalega. So format is very simple. Now we need to understand cash flow from operating activities, direct method as well as indirect method, ki how to present. Correct. So can I say direct method is very simple. Can I say we'll do all the inflow minus all the outflow under operating activities. So we'll start with gross received, which you can see received from operating activities. So what can be the possible receipt? Can I say cash received from customer of goods and services? Whatever cash collected from customer means debtor. Correct now. So it can be either cash sales or collection from debtor. It can be cash sales or collection from debtor. Cash sale, this information it will be given in the question. Normally information is given in question. For cash sales, information is given in question. Correct. For collection from debtor, we need to prepare one debtor account. So in exam, we need to prepare one debtor account. Now how to prepare debtor account? Of course you know. Correct now. Of course you know debtor account. Correct. If you don't know, so of course we'll take some question in which I will explain how to prepare debtor account. Correct. Then cash received from royalty, commission and other revenue. Can I say this information will directly given in the question, or if there is some indirect information, we need to prepare the respective account also. Correct. So this become received from operating activities. So you can see cash received from customer or and cash received from any other operating income. It can be royalty income, it can be commission income, it can be sale of scrap, it can be sale of newspaper. Understood? Yes sir. Then gross payment for operating activities. Gross payment for operating activities. So cash payment to supplier, cash payment to supplier for goods and services. Correct. So it will include cash purchase. This information will be given in the question. Directly the information is given in the question about the cash purchase. Got this point? Ha. Can you see we need to also calculate the payment to supplier. Payment to supplier means we need to prepare one creditor account. We need to prepare which account? Creditor account. So if you prepare credit account, you will get how much payment has been done to supplier. Chalega. Then cash payment to and on behalf of employee means salary paid. This normally information is given. Cash payment to other operating expenses, this normally is given the question. Correct. The sum total of this is known as cash generated from operation. We call it cash generated from operation. Cash generated from operation. From this we will deduct income tax paid. So any income tax paid will be deducted, means income tax paid should be shown separately. You can't show income tax paid with what? This item. So income tax paid need to be shown separately, need to disclose separately. So less income tax paid. So first calculate cash generated from operation, from that you deduct income tax paid. This will be what? This amount will be what? Any cash from operating activities, but before extraordinary item. This will be before extraordinary item. I hope extraordinary item you know, because that has been defined under AS5. that has been defined under AS5. So what AS3 says that any extraordinary item, any income, any receipt or payment of extraordinary item need to be disclosed separately under operating, investing and financing activities. So if suppose there is some extraordinary inflow outflow that need to disclose separately, so any extraordinary cash inflow outflow need to be disclosed separately. For example, insurance claim received on damage of stock, so can that become an extraordinary item, need require separate disclosure, this will become net cash flow from operating activities. Understood the presentation part? Of course we'll take some questions. First let us do the revision. This is very simple, inflow minus outflow, correct? Any doubt? Any doubt about this? Bolo. You can ask me doubt if you have doubt about this. Just write down, if for the expenses, suppose there is some prepaid or outstanding expense are given, then we need to prepare expense account to find out what is the payment done. Be careful about that. Means it is quite possible there is some prepaid expense or outstanding expense given in the balance sheet. So it means whatever expense given in SOPL is not equal to the payment done. Then in that case you need to find out what is the payment made for this particular expense. For that we need to prepare expense account. Got this point? Correct. Now for income tax paid, correct. Now just write down, if income tax payable or provision for tax is given in balance sheet, return prepare provision for tax account to find out what is the income tax paid. Correct. To be careful about these all points, income tax paid, prepaid expense, be careful about this point. We'll of course take a note of this particular point when I will take some questions. Understood? Chalega. Now let us come to indirect method. Indirect method is very simple. If you try to understand that, we need to convert PBT, profit before tax, to cash flow from operating activities. How to convert? So we will start from profit before extraordinary item and tax. So can you say this will be given in SOPL? Means if I show you one SOPL format, so SOPL how it looks, this is SOPL. So first we write down income, then we write down expense, all expense. This will become profit before extraordinary item and tax. From this we'll do plus minus extraordinary item, this will become profit before tax, and from this we'll do minus tax expense. Now you know tax expense can be current tax, deferred tax as per AS 22, correct? This will become profit for the year. This is very simple format I have drawn, correct? So we'll start with this. If this has been given, so we'll start from this. Profit before extraordinary item and tax. Don't start from this. Start from here. Profit before extraordinary item and tax. If you are starting from this, so you need to add tax expense. Then to eliminate extraordinary item, then this will become what? Profit before extraordinary item and tax. So starting point will be profit before extraordinary item and tax. So the starting point is this. Starting point is what? Profit before extraordinary item and tax. Understood this point? This is the starting point for calculation of cash flow from operating activities. Have you understood this point? So this you have taken from statement of PL. This you have taken from statement of PL. Correct now. Now if statement of PL is not given, how to identify this? That I will explain. How to identify this that is given. Just write down. Just write down. If this is not given, देखो, I have not given note. So suppose if SOPL is not given, SOPL is not given, then we'll prepare one profit and loss appropriation account. Because can you say in the balance sheet this account will be given PL appropriation account or retained earning, you can say. This is also known as retained earning. Retained earning. So we need to prepare one retained earning account. PL appropriation account. Correct. So in this what we write on, this become opening balance. We write on opening balance. This will be given in the balance sheet. This will become closing balance. This will be given in the balance sheet. Correct. Then we write on 2 dividend paid, means any equity dividend paid. So equity dividend is actually debited to PL appropriation account. 2 preference dividend paid during the year. This will be given as an additional information to you. Correct. Understood. And any transfer to any reserve and surplus. Suppose from PL appropriation account you have transferred to some reserve and surplus. Suppose you have transferred to general reserve. So general reserve will come. Correct. So these are normally this type of information are given. So balancing figure of this account will become net profit. Net profit. So can is net profit you can find out. This net profit you can find out. Understood. Net profit you can find out. Understood. And this is net profit is nothing but what? If I am saying net profit, so net profit is profit after tax. This is profit after tax. If we add tax expense debited to PL, if you add back tax expense debited to PL, means current tax and deferred tax, that is debited to PL. If you add back, so can I say this become profit before tax? Profit before tax. This become profit before tax. So we want this profit before tax, but this become profit before tax after extraordinary item. So we need to eliminate extraordinary item also. So in this you will minus any extraordinary income. We are eliminating right now extraordinary income or plus extraordinary expense if given the question. Normally this much they don't ask in exam, but I am just informing you if suppose they ask. So this become profit before extraordinary item and tax. Understood? So this become the starting point. So this will be a part of working note. This will be a part of working note. Understood? Have you understood this point? Bolo. Have you understood this point? So if SOPL is not given, if SOPL is given, so that can say directly you can take profit before tax and extraordinary item. But if SOPL is not given, so we need to find out by preparing this working note. By preparing this working note. Any doubt about this? Bole. Or if you want to combine this, so how we'll do? Just try to understand. Can I say you can also do in this way? Okay, first write down profit after appropriation. Means I am just giving some other way to do this. The working note. So you can write down profit after appropriation. So this is nothing but closing balance minus opening balance. Correct. In this we'll add any dividend paid, whether equity or preference. Then we'll add transfer to general reserve, transfer to any reserve and surplus. So this will become profit after tax. In this we'll add tax expenses, which is debited to PL. This will become profit before tax. Then we'll do plus extraordinary expense debited to PL. This is also debited to PL now, which is already debited to PL, and minus extraordinary income, which is already credited to PL. So this we are eliminating. So you can also do in this way, and this will become profit before extraordinary item and tax. Understood? So this can be prepared as a part of working note. This can be prepared as a part of working note. So either you can prepare in account format or in this format. This is a part of working note. And if once you have got this, can you see starting point will become this? So you can see the starting point is what? Profit before extraordinary item and tax. Chalega. Any doubt in this? First let me know, have you understood this point or not? Understood? Yes sir. Now we'll do two adjustment. Adjustment for non-cash item and non-operating item. We'll do adjustment for non-cash item and non-operating item. Non-cash item means which is there is no movement of cash. Means for example depreciation of property, plant, equipment, amortization of intangible asset. So non-cash item will be eliminated because here we want only cash flow from operating activities. So any non-cash item which is already adjusted in PL will be eliminated. So non-cash expenses, so we'll add what? We'll add back any non-cash expenses and will minus what? Any non-cash income. Non-cash income. Example of non-cash item is given. So examples of non-cash item is depreciation. So any depreciation which is already debited to PL will be plus. Any amortization of goodwill will be plus. We'll add back impairment loss on asset. Now you know about impairment loss because you have done AS20, that is also non-cash, that will be added. Preliminary expenses written off, suppose there is some amortization of preliminary expenses have written off during the year, so that will be added back. Provision created, if you have created some provision, so that is also one type of a non-cash, that will be added. And reversal of provision, means it has been created to PL, you have reversed the provision, so there is no cash movement, so this will be minus. So any non-cash expense will be added, any non-cash income will be deducted. Understood? Adjustment. Similarly, any non-operating item means they are related to investing or financing activities. For example, interest income, dividend income, interest expense, these are related to either investing or financing activities, so that will be also eliminated. So if there is some expense, we'll add back. There is some income, that will be deducted. Understood? Means non-operating expense will be added and non-operating income will be deducted. Chalega? Now you can also start from profit after tax, your choice. You can start with profit after tax, but the format is means if I'll say AS3 has given this format. Correct. Now you can start with profit after tax. Naveen, you are correct. You can start with profit after tax. Just try to understand. I don't know from which faculty you have done. So if you want to start from profit after tax, that is also correct. That is not wrong. That is also correct. Okay. Understood? So you can start with profit after tax, but can you say profit after tax? You need to convert first that into profit before extraordinary item and tax. Means what I am doing in working note, you are doing in the main solution. The difference is that only. Correct? Have you understood, Naveen? Chalo. So you have understood adjustment for non-cash item. Examples also we have done. Now non-operating items. Can you give me some examples? The non-operating item. You can see profit or loss on sale of investment, property, plant, equipment. So that will be eliminated. If profit, if there is a profit, this profit ko will do minus. If there is a loss, will do plus. Will add back. Chalega. Any rental income or investment property. So any rental income which has been created. Can you, this will be minus. Will do minus. Any interest income other than from cash and cash equivalent, because cash and cash equivalent is not investing activities. So any interest income generated from cash and cash equivalent, that will not be eliminated, but any interest income on other investment will be eliminated minus. See, dividend income will do minus. Dividend income will do minus. Correct. Interest expense will do, because interest expense is on what, long term borrowing or short term borrowing, that is a financing activities, so will do plus. Correct. And then unrealized foreign exchange loss, this I will explain with a separate point. So just give star mark. Will do at the end. This exchange loss will do at the end. Chalega. So I think these all examples you have understood. So in simple word I will say, any item related to any income and expense related to non-operating activities, means financing or investing activities, will be eliminated. When you are saying eliminated, expense will be added back, income will be deducted. So this become operating profit before working capital changes. So this become operating profit before working capital changes. Now we'll do sum plus minus for changes in working capital. So what we'll do, any increase in operating asset, will be what, will do, any increase in operating asset will do minus. So any increase in operating asset will do minus. Okay. Any decrease in operating asset will do plus. Correct. So any decrease in operating asset will do plus. Asset means what? Can I say debtor, prepaid expenses? These are what? Asset. So we are talking about current asset, not all asset. Current asset. Operating current asset. Understood? So there may be some non-operating current asset also. So for that no adjustment is required. Only need to find out which current asset are operating. For that adjustment is required. So minus increase in operating current asset plus decrease in operating current asset. Correct. So increase decrease means what? That whether closing balance is more than or less than opening balance, means you need to compare closing balance with opening balance. Then increase in operating current liability. Will be what? Plus, and decrease will be what? Minus. So this you need to remember. If you have done mistake यहाँ पर, so it will be dangerous. So can I say, when I am saying, just try to understand. I'll just give one example ki why we are doing plus minus. Suppose this is a debtor. Suppose I am saying debtor account. Now opening balance is suppose 10,000, and during the year sales is equal to 1 lakh, and suppose collection from debtor is suppose 1,05,000, and the closing balance become what? 5,000. This is the point. So what I am saying, this is the opening balance and this is the closing balance. You can see decrease. So decrease will be what? Decrease in operating current asset will do what? Plus. Now why we are doing plus? Just try to understand. In SOPL we have credited how much? 1 lakh. In SOP we have created 1 lakh because sales of the year is what, 1 lakh, but we have collected 1 lakh 5,000. So we have collected 1 lakh 5,000. It means, can I say, if I am preparing cash, if I am calculating cash profit, so how much collection is 1 lakh 5,000, but we have created 1 lakh, means, can I say, we need to increase our cash sales, we need to increase our cash sales or collection by 5,000, and therefore 5,000 is added to the profit because that is excess collected during the year, that is excess collected during the year, which was actually a sales of previous year collected in current year. So that will be part of current year cash flow, current year cash flow. So as per accrual system we have created 1 lakh, but as per cash system we need to credit how much, 1 lakh 5,000. So that difference has been added. So if there is a decrease in debtor, means the collection will increase, collection will increase to add. If there is an increase in debtor, means increase in debtor, it means collection has decreased, so collection decreased to minus कर दो, collection decreased to minus. Same opposite for what, liability. So simple rule is what, कि if I am saying operating asset and operating liability, correct, understood. So any increase in this will minus, this will plus, any decrease will plus, this is minus. This is the rule. This rule you need to keep in your mind. This rule you need to keep in your mind. Understood? Have you understood this point? Yes, sir. So can I say you have understood this also? So can I conclude that this point also you have understood? So can you repeat with me? Increase in operating current asset will be minus, decrease in operating current asset will be plus, increase in operating current liability will be plus, and decrease in operating current liability will be minus. But you can see operating current asset I am saying means there are some current assets which are not operating in nature. There are some current asset or current liability which are not operating in nature. So for that we will not do this adjustment. For example, can I say if I am saying interest receivable, so interest receivable is a current asset, but can I say it is not operating, this is related to investing activity, therefore will not be considered in this particular format. Correct. So there are some examples, this you need to remember, examples of non-operating current asset and non-operating current liability which should not be considered for working capital changes. Be careful about this point. Correct. For example, interest receivable, this is which activities? This is actually investing activities, therefore will not be considered. Interest payable, this is financing activities. Fixed deposit, so fixed deposit, it can be either cash and cash equivalent or it can be investing activities. So it is an investing activities if nothing is being given. Short term borrowing, it is a current liability. Short term borrowing, bank overdraft is a current liability, but this is a financing activities. Loans and advance given, if you have given some loans and advance, you have given, if you have given, so it can be short term, it can be current, but can I say this is also investing activities, this is also investing activities. Understood this point? Have you understood this point? Have you understood? To be careful about this point. Till now this type of, normally they don't give this type of information in balance sheet, but if given it can be dangerous, if given it can be dangerous. Correct? Naveen, you want explanation for increase decrease of current asset and current liability, you want that? Correct? Already I have explained, just try to understand. When you are preparing, what I want to say, once again I will repeat, suppose you are preparing SOPL. So in SOPL you have written sales 1 lakh, and suppose this is entirely credit sales, मान लो this is credit sales, ठीक है, and suppose there is a cash purchase during the year, you have purchased 80,000 and this is cash. So your profit is how much? Your profit is 20,000. Your profit is 20,000. But can you see this 1 lakh may or may not be collected during the year? This 1 lakh may or may not be collected during the year. So I have said prepare what, one debtor account? Prepare one debtor account. Debtor account. Suppose the opening balance is 10,000 and this sales will come in this debtor account. To sales is coming, suppose this was 10,000. Just try to listen everything. If you are listening everything, you will be able to understand. If you will not listen, because we are doing quick revision in class, so I will take 5 class for this cash flow statement, means 5 into 3 15 hours will do, 15 hours. So in regular class of course we'll do in detail. Abhi right now if you take much time on this, so I will be not able to revise it properly. So I'm assuming that everything you know, only we are doing revision. Only we are doing revision. Chalega. Now suppose you have collected 1,05,000, correct? And closing balance become what? Closing balance become 5,000. This is the case. Now can you see, if you are using direct method, if you are using direct method, so what is your cash collection? Cash collection is 1,05,000. It's not 1 lakh. And cash purchase 80,000 means your cash profit is 25,000. Your cash profit is 25,000. This is the cash profit from operating activities. Means this is the cash inflow from operating activities. The direct method is easy. Direct method is easy to understand. First, have you understood direct method? First, have you understood direct method? Reply. Yes, sir. Now you are using indirect method. We will start with profit before tax. Profit before tax is 20,000. But okay, this is not cash profit. So what we'll do? We'll do minus decrease in debtor. Sorry, plus decrease in debtor. Plus decrease in debtor. So you can see 10,000 now become 5,000. Why 10,000 become 5,000? Because some opening balance was collected during the year. So that is nothing but generating some cash inflow in the year, in the current year. Understood? Means any sales of last year collected in current year. Sales of last year collected in current year. So of course the cash profit of current year will increase. So that will be added. And now can I say it will become 25,000? It will become 25,000. And this is the rule. So I have explained for one. If you have understood one, you will automatically understand the balance part. The rule is what? Rule is this. Means any operating asset, this become rule. Increase will be minus. Means that is decreasing cash collection. Understood? Decrease means what? Increasing cash collection during the year. And the reverse for operating liability. Now have you understood? So I will say this you need to keep in your mind, because in exam suppose you are not able to apply the concept, you need to apply this. If you know this, you can do all the questions. So come to the examination point of view. Examination point of view, this is the only rule. Then follow this rule. Follow this rule. So for operating asset, increase reverse minus, decrease it will plus. For operating liability, it is direct relation. Increase plus, decrease minus. Chalega? Yes, sir. I hope you have understood this also. Okay, sir. So now we were into this point. Have you understood? These are non-operating current asset and current liability. This will not be considered in this statement. Yes, sir. So after this become cash generated from operation. Okay, this cash generated from operation will be actually equal to this indirect method. This and this will be always same. This and this will be always same. Now after this it remains same. From this you will do minus income tax paid. Minus income tax paid, this will be cash flow from operating activities before extraordinary item. Then do extraordinary inflow and outflow. This will become cash flow from operating activities. Net amount means after extraordinary item, correct? This become the format. Now income tax paid, once again income tax paid. So income tax paid, for this will prepare provision for tax account. Provision for tax account to find out income tax paid, as we have done in the direct method. Now just try to understand provision for tax. Once again it is a current liability. So that current liability, the provision for tax account should not be considered in this changes in working capital, because provision for tax we need to write separately income tax paid, and therefore provision for tax should not be considered in this working capital changes. For this also one note I have already given, ki provision for tax and advance tax or TDS should not be considered for working capital changes, as income tax payment should be shown as a separate item under cash flow from operating activities. Chalega? This I will explain with one question also. Have you understood this point? This become cash flow from operating activities by using direct method and indirect method. Direct method also I have explained. Indirect method also I explained. Now of course we will take some questions. We'll take some questions, but after completion of each and every point. Any doubt? Any doubt in concept that you ask me? Up to this. I'll wait for 1 minute. Ask me. Now coming to next point, cash flow from investing activities. This is very simple. In this nothing to explain. Means all the inflow will be added, all the outflow will be deducted. To purchase of PP, an intangible asset. Can I say outflow means minus? Expenditure on construction of PP. Can I say outflow means minus? You'll do minus. Purchase of investment other than cash and cash equivalent, because cash and cash equivalent is not a investing activity. This is also minus. Purchase proceed from sale of PP, an intangible asset. Can I say plus? This will be plus. Proceed from sale of investment other than cash and cash plus. Interest received. Can I say plus? Dividend received. Can I say plus? Now dividend can be pre-acquisition and post-acquisition. This I will explain separately. So right now don't think about pre-acquisition and post-acquisition. That will be discussed separately. So dividend received will be what? Plus. Correct. This will become net cash flow from investing activities before extraordinary item. Before extraordinary item. So any extraordinary income, extraordinary inflow or outflow from investing activities. For example, you have received insurance claim on damage of property, plant, equipment. So that become extraordinary inflow for investing activity that requires separate disclosure. So write on extraordinary item after this inflow outflow. This will become net cash flow from investing activities. Chalega. I think no doubt in investing activities. Bolo. These are a format I have given. Of course, this entire format will be actually depend upon the information given the question. Ki what will plus, what will minus, that will depend upon the information given the question. Now let us come to financing activity. This is financing activities. Just correct it. Financing activities. Okay. So financing activities. So of course whatever activities which changes the composition of share capital and borrowing, that will be taken into account. So proceed from issue of shares including premium amount, this will be plus. Correct. Proceed from long term loan means you have taken some loan, you have received some amount of loan, this is plus. Proceed from issue of debenture, you have issued debenture, plus. Correct. Now redemption of preference shares including premium. Including premium is you have paid premium on redemption of preference share. Can I say minus? Then redemption of debenture including premium. Can I say minus? Correct. Repayment of loan. Can I say minus? Interest paid. Any interest paid minus. Interest paid minus. Dividend paid. Dividend paid on preference share capital or equity dividend. So both equity and preference, both minus. This will be net cash flow from financing activities before extraordinary item. Any extraordinary item requires separate adjustment. This become net cash flow from financing activities. Simple. Yes sir. Any doubt? Now what we can do? These are some special points. Special point I will discuss at the end. Now we can take some questions. Can we take some questions now? If you have understood this much, I will take around 5 to 6 questions so that all your doubt is over. If you have understood this much, can you give me a green signal that you have understood this much? Okay, this much you have understood. So let us come to some questions. Come to question number 17. We'll take one simple question, then we'll make it thoda sa, we'll take difficult question at the end. Okay. So Miss Jyoti of Star. First we'll take question 16. Raj Limited give you the following information for the year ended 31st March 2006. They have given sales for the year 48 lakh. The company sold only cash only. Means this entire sales is cash sales. Cost of goods sold is 75% of sales. Means cost of goods sold is 75% of sales. Okay. Means the cost of goods sold will be 75% of 48 lakh. So 48 lakh into 75%, how much it is coming? 36 lakh. 36 lakh. Closing inventory was higher than opening inventory, means there is an increase in stock. Increase in stock how much? 50,000. Means this information they have given for indirect method, and this information you may use it for direct method. Now you will be confused whether direct method or indirect method. Correct? Yes, sir. Trade creditor exceed trade creditor means closing balance exceed the opening debtor by rupees 1 lakh. So there is an increase in creditor by rupees 1 lakh. Increase. Tax paid, it is given tax paid during the year 1,50,000. Okay. Amount paid to creditor during the year. Now this amount paid, payment has been given. Now you will be confused about whether you to use direct method or indirect method. Correct? Because this question both information has been given, direct and indirect. Admin and selling expense paid, this is also payment given. Okay. One new machinery was acquired, this become investing activities. Dividend paid, this become financing activities. Cash, this become closing cash, closing balance, this become opening balance of cash in hand. Prepare cash flow statement, and nothing has been given. Nothing has been given. Means can I say, because this question both the information given direct and indirect, you can use either direct method or indirect method as per your choice. As per your choice. Correct? I will say this question can be done both by direct or indirect method. First we'll take direct method, then we'll do indirect method also. Correct? But I will say because all the information has been given over direct, better to use direct method. Better, because directly all the information has been given. Directly all the information has been given. So let us come to the solution part. So already I have the solution. So I will explain you from that solution only. Chalega. So we are doing question number 16. Question 16 you can see. Correct. So you can see first I have used direct method. So this is the format cash flow statement of Raj Limited for the year ended 31st March 2006 by using direct method. Correct. So first we write down cash flow from operating activities. Correct. Case cash sales has been given 48 lakh. Cash sales has been given 48 lakh. Then payment to creditor has been given. Payment to creditor how much given? 35 lakh 50,000. Payment to creditor has been given. Correct. And then they have given some expense paid, admin and selling expense paid. So payment of admin and selling expense, they have given 3,60,000. So all the payment, all the inflow and outflow of operating activities has been given. Correct. So this become cash generated from operations. This become cash generated from operation. From this will do minus income tax paid. So income tax paid is also given. Income tax paid is also given. And after this will become cash flow from operating activities. Direct method. Direct method. Very simple. Very simple. Correct. Now we'll do cash flow from investing activities. So can you say they have given purchase of machinery. Only one item they have given purchase of machinery. So purchase of machinery minus 6 lakh, and only one item they have given. So net cash flow from investing activities will become minus 6 lakh. Correct. Then we'll do cash flow from financing activity. Only one information they have given about dividend paid. So dividend paid they have given 1,20,000. So that become only one item, so that become net cash flow from financing activity 1,20,000. So this plus minus this, this will become 20,000 because it is plus. So this is increase in cash and cash equivalent during the year. So this become increase in cash and cash equivalent during the year. Now we'll add opening cash and cash equivalent, and opening plus this will become 70,000, which is the closing cash and cash equivalent during the year. I think super easy. Super easy. So I will say because this question the profit during the year has not been given, so better to use direct method. But we can also use indirect method. Can I say for indirect method, first we want profit. So you need to prepare one working note. Correct now. So how to calculate profit before tax? So sales has been given 48 lakh. Less cost of goods sold has been given 36 lakh. And they have given admin and selling expense 3,60,000. So we have assumed whatever has been paid that is related to current year, that only become expense. That is our assumption. So this become profit before tax. Now we can start from this profit before tax in our indirect method. Are you able to understand what I am doing? So this become a working note to calculate first PBT. PBT we calculated. Now we'll start by using indirect method. So cash flow from operating activities will start with profit before tax. Now in this particular question there is no non-cash expense. You can see in this SOPL there is no non-cash item, there is no non-operating item, therefore there is no adjustment required for non-cash item and non-operating item. Directly we can do changes in working capital. Have you understood this point? So this PBT is nothing but operating profit before working capital changes. This PBT is nothing but operating profit before working capital changes. Now they have given two information about changes in working capital. One, they have given increase in stock. You only say increase in stock because this is asset. Will be plus or minus? Inverse karna, inverse means minus. So increase in stock will be minus, that is 50,000, and there is an increase in trade payable. Trade payable is liability. So increase in trade payable can is direct relationship, so it will be plus, it will be plus. So this become cash generated from operation, this will become cash generated from operations. Understood? Have you understood? You can see this 8,90,000 will be always equal to this 8,90,000. You can see here also we calculated 8,90,000, and now income tax paid minus karna. Income tax paid is 1,50,000. This become net cash flow from operating activities. Then investing activities and financing activity remain same. You can prepare what cash flow statement. Understood this question? Have you understood this question? Normally this type of question they ask for 8 marks, 6 marks to only understand whether you know about the cash flow statement or not. So this type of question can be asked in exam. Have you understood the first question? Any doubt? Let us come to second question. Come to question 70. Now Ms. Jyoti of Star Oil Limited has collected the following information of preparing cash flow statement for the year ended. You can see net profit has been given. Can you see net profit has been given? So it means we need to use indirect method. It is an indication that we need to use indirect method. It is an indication. So whenever net profit is given in some information, it is an indication that we need to use indirect method. Correct? Now dividend paid. Can dividend paid is not transferred to PL. So no adjustment is required for dividend paid. Normally student do mistake, but this is a financing activity. This is a financing activities, correct? Then provision for income tax, because they have given net profit. Net profit means profit after tax. Profit after tax. So can I say provision for income tax should be added back to net profit to find out profit before tax. So this will be plus. We'll do plus in profit after tax to get what? Profit before tax. Then income tax paid, this is operating activities, income tax paid. Loss on sale of asset, can say non-operating item, this will be plus. Book value of asset sold. Now what is the book value of asset sold? 185, and it was sold at a loss of 40. So what is the sale process? Can sale process become 185 minus 40 is equal to how much? 185 minus 40 is equal to 145. And this will be which activities? Investing activities. This will become investing activities. Are you getting what I am saying? Now depreciation charge to SOPL, depreciation is non-cash expense, will be added plus करेंगे in operating activities, will do plus. Profit on sale of investment, can I say this is non-operating income, will do minus. Now carrying amount of investment sold. So carrying amount of investment sold is 27765, means book value of investment sold. So what is the sale proceed? Okay, sale proceed will be 27765 plus profit. It become 27865, and this will be investing activity. This will be investing activities. Are you able to follow me? Then interest income received. Received किया, interest income received, correct? So interest income received, so can I say if they have given interest income received and nothing has been given about the interest income, so always will assume that whatever received, that is only income. So first, can I say we need to eliminate, this is minus from operating activities, and this will become investing activities. Have you understood? So if nothing is given, we'll always assume that entire income has been received. And there is no interest income receivable in the balance sheet, correct? If nothing has been given, but you can see interest expense of the year they have given 10,000, but interest paid during the year is 10,520, means there is some interest expense of last year which is paid in current year. This is understood. So this will be added in operating activities to calculate cash flow from operating activities, but interest paid during the year will be financing activities. This will be financing activities. Have you understood this point? This particular point have you understood? Then they have given increase in working capital, means they have given increase in working capital. Thank you very much, I will say. So increase in working capital will be assumed to be increase in current asset, increase in current asset. So increase in current asset, can I see, will do minus. So they have given increase in working capital directly without giving the separate increase in asset and liability. So they have given increase in working capital. So working capital means what? Increase in current asset, increase in net current asset, you can say. So it is minus only, chalega. Then purchase of fixed asset, can I say this is fine, this is investing activities minus, investing activities में minus करेंगे, outflow means minus मत लिखो, you will be confused. चलेगा. Then investment in joint venture, if you have investment in joint venture, because now you have done AS27, so it is nothing but one investment has been done, correct now. So this will be also investing activities. Expenditure on construction of WIP, WIP means you are constructing some property, plant and equipment, etc. So that is also investing activities. Proceeds from calls in area, calls in area means share capital, calls in area, so this will be financing activities. Receipt of grant for capital project, capital project means what? Means, can I say, there is some you are involved in the construction of some property, plant and equipment, and for that you receive some grant. So can I say the grant whatever you have received, that is related to investment activity, whatever you have received the grant, that will be also considered as what? Investing activities. So this will be considered as investing activities, correct? So it depends upon it depends upon for which purpose you have received the grant, for which purpose you have received the grant. For example, if you have received grant for operating expense, then that grant will be which activities? Operating activities. But this is grant we have received for some property, plant, equipment, etc. So whatever grant you have received, that will be considered as investing activities. Chalega. Then proceeds from long term borrowing will be financing activities. Proceed from short term borrowing will be financing activities. Then they have given opening cash and closing cash. They have given, you need to prepare cash flow statement. Can I say this question cannot be done by direct method, because they have not given collection from data, payment to supply, this information has not been given, and they have given net profit. It means it is an indication that we can use only indirect method. Chalega. Now we can do it. Have you understood? Can we start doing it? So we'll start. So I have the solution. I will explain from this only. So we'll start cash flow statement of for the year ended of the company. So cash flow from operating activities. So we have started net profit. Net profit is profit after tax. Already you have asked me the question, can we start with PAT? So of course you can start with PAT also. Now if you are starting with PAT, first convert PAT into PBT. So to convert PAT into PBT, can you say we'll add provision for tax? So add provision for tax. Provision for tax means the tax expense charged to PL. Tax expense charged to PL. Correct. So provision for tax and tax payment may be different. Provision for tax means whatever tax expense debited to PL and what is the tax payment may be different. So both information are given in the question. The provision for tax means whatever is the debited to PL, so that will be added back. So this will become profit before tax. Chalega. Now adjustment for all the non-cash item and all the non-operating item. So there was a loss on sale of asset, will add back. There is depreciation, that will be add back. Then there is a profit on sale of investment, that will minus. Are you able to understand? Then there was one interest income, that will be minus. Then there was one interest expense, that will plus. This will be operating profit before working capital changes. Have you understood this much? This much have you understood? Bolo. I hope you have already downloaded the expected question and this AS Saaransh book. AS Saaransh book you have downloaded, correct? Have you understood this much? Then only I will proceed. Understood? Yes, sir. Now, can you say once you have calculated operating profit before working capital changes, then we will do plus minus in increase or decrease in working capital changes. So they have given what? They have given increase in working capital. So increase in working capital is nothing but what? It is increase in net asset. Increase in net asset means what? Minus. So we'll do minus increase in what? minus increase in working capital changes, minus increase in working capital changes. Have you understood this? Correct. So this is minus increase in working capital changes. So this will be what cash generated from operation. From this will minus income tax paid, and this will become net cash flow from operating activities. Correct. Now we'll do cash flow from investing activities. So all the information has been given directly for investing activity. There is one proceed from sale of asset proceed. So that is carrying amount has been given. We have deducted loss. So that become what? Proceed from sale of asset. Understood. Then they have also sold one investment. The proceed from sale of investment, they have given carrying amount and profit. So we can easily calculate this. Then there was one grant received for capital project, that already I have explained. That will be investing activities. So received from grant, that is a plus received from grant. Correct. Then interest income received has been given. Interest income received, that is also given. Correct. Then investment in joint venture, that is a purchase of investment, means minus. So purchase of investment means minus. Then there is one purchase of property, plant, equipment with fixed asset, minus. And there is one expenditure on capital WIP, that is also minus. This all plus minus, this will become net cash flow from investing activities. Net cash flow from investing activities. Chalega. Understood? Yes sir. Now we'll come to cash flow from financing activity. Whatever the information, direct information given. Dividend paid has been given, so minus. Then interest paid has been given, minus. Interest paid has been given, minus. Then proceed from calls and area has been given, plus. Proceed means received. Then proceed from long term borrowing, short term borrowing, that is also received, plus karenge. This will become net cash flow from financing activities. This will be but increasing cash and cash equivalent, add opening cash and cash equivalent, that will become closing cash and cash equivalent, and done. Understood? So one special note I have given for grant received. So if as per AS 12, government grant can be of the following nature. It can be for depreciable asset, non-depreciable asset, or for revenue expenses. So if you have received any grant for revenue expenses, that will be on operating activities. If you have received grant for depreciable asset or non-depreciable asset, that will be always investing activities. Correct? So be careful about grant received. Be careful about grant received. Any doubt? Any doubt in this question? The two questions we have done simple. I have taken first simple question. Now will increase the level. So they will took profit before tax nasar. So in the tax paid not included nasar. Again, why we deducted rather to know the correct profit? No. Just try to understand. First we have taken what? Here net, this is what? 25,000. This is profit after tax. So profit after tax means tax expense has been deducted. Okay, tax expense and the tax payment can be different. Tax expense and the tax payment can be different. For example, suppose this is profit and loss account. So your profit before tax, as per our question, profit before tax was how much? 30,000. And from these we deducted tax expense. As per the question it was 5,000. So that become profit after tax how much? 25,000. And the tax paid during the year, tax payment can be different. So tax payment is how much? As per our question, tax payment was how much? 4248. 4248. Correct. Now first we want, because can you see this tax expense is not a tax payment. Correct. So can you see this is also a non-cash item. This is also non-cash, because the cash payment is this. So first from 25,000 we have added what? Tax expenses to get profit before tax. So this is now profit before tax, and from this should be the tax payment, and we have deducted at the end, because AS3 says that tax payment need to be shown separately at the end. Therefore tax payment has been shown separately at the end. Understood now? Have you understood this particular point? Bolo. So what we have done? 30,000. Let us say there is no other item. 30,000 minus 4248. So first 25,000 was converted into 30,000, and 30,000 means minus how much we have done? 4248. Have you understood? But you can't do the net amount, means you can't say 5000 minus 4248. The net adjustment you can't do, because as per AS3 tax payment need to be shown separately at the end. Because of that reason we are doing in this way. Chalega? Yes sir. Any more doubt? No doubt. Can we come to one more question? Come to next question. Question 18. This is also a good question. The following figures have been extracted from the books of X Limited for the year ended on 31st March 2019. You are required to prepare a cash flow statement by using indirect method. They have now mentioned indirect method. Indirect method. So what they have given, net profit before taking into account income tax, means this is the profit before tax has been given, and income tax from lawsuit, but after taking into account A, B, C, D. So this 20 lakh is profit before tax and extraordinary item. Understood? So this is profit before tax and extraordinary item, means thank you very much, we want that only given. Correct now. But after taking A, B, C, D, E and F, have you understood this point? Correct? Yes sir. Now depreciation, can I say this will be added? Discount on issue of debenture, can a discount on issue of debenture has been written off, so this is nothing but amortization of discount. This is also non-cash. We'll do plus. Interest on debenture paid, so this is a financing activities. We'll do minus. Book value of investment 3 lakh and the sale price 3,20,000. There is a profit of 20,000. So profit of 20,000 will be eliminated. So we'll do minus profit 20,000. And then interest received on investment, this is also what, an investing activities. This will be also minus. Compensation received 90,000 by the company in a lawsuit filed. Correct? So compensation received 90,000 by the company in the lawsuit filed. Actually, from my point of view, this should be a separate. I think there is some typo mistake. This is separate point. Give point number 2. Okay, because this is income. They have given net profit before taking this account. So I think there is some mistake in the printing. Correct. So this is compensation received. They are given separate information. Means, can I say profit before tax of 20 lakh is not is before taking account this compensation received, and this compensation received is nothing but extraordinary item. This will be disclosed separately. So this is an extraordinary income, I will say. Extraordinary income. Then income tax paid has been given 10,50,000. Then they have given 15,000 10% preference shares of rupees 100 each were redeemed on 31st March 2019 at a premium of 5%. So can this become which item? Financing activities. This is a financing activities. Further, company issued 50,000 equity shares of rupees 10 each at a premium of 20% on 2/4/2018. Okay, this is also what, financing activities. Dividend of preference shares were paid at the time of redemption. Okay, this is also financing activities. Dividend paid for the year 17/18. For the year 17/18 means this is final dividend paid. The final dividend means previous year dividend paid in current year. This is also financing activities. And interim dividend paid in current year. This will be also financing activities. Land purchase on 2/4 for rupees 2,40,000, for which the company issued 20,000 equity shares of rupees 10 each at a premium of 20% to the landowner. So just write one. This is the purchase of land by issue of equity shares. So okay, there is no cash movement. So when you purchase land by issue of equity shares, so what our AS3 says that this is a non-cash transaction which involves some investing and financing activities. So that will be excluded from cash flow statement. Means there is no need to disclose in cash flow statement. Only it can be disclosed outside the cash flow statement in the notes to account. So this is a non-cash transaction, should be totally ignored from the cash flow statement. Should be totally ignored from the cash flow statement. Understood? One minute. Have you understood? Then they have given current asset and current liability. This is for working capital changes. So you only say inventory. This is the opening balance. This is the closing balance. Inventory increase plus ki minus. Bolo. It will minus. Trade receivable. It is decrease. This plus ki minus plus. Then cash in hand. Cash in hand will be separately shown. This will not do increase or decrease. Trade payable liability. It is 11,000, 11,300. Increase means what? Plus. Outstanding expense. You can increase means what? Plus. This question have been asked for 20 marks also and for 10 marks. Means in one exam they have asked for 20 marks. In one exam they have asked for 10 marks. I think this question is for 10 marks only because very easy. Understood. Can we do this? Means with this question I am just trying to explain the format for indirect method. Format for indirect method. Correct. So come to question number 18 now. Question 18. So we'll start the question 18. You can see this is a question 18. They have given profit before tax and extraordinary item 20 lakh. We'll start from this. Correct. Then amortization, then adjustment for depreciation plus 5 lakh. Then discount on issue of debenture plus, that is amortization of discount on issue of debenture. Correct. Then interest, there is one interest payment, that is 3,50,000. So we'll assume interest payment and interest expense are same if nothing has been given. Then there is one profit on sale minus 20,000 and there is one interest received minus 60,000. This become operating profit before working capital changes. Now we'll do what? Minus increase in stock. Minus increase in stock. That only we have done. Check kar lo. Minus increase in stock. Then plus decrease in debtor. Then plus increase in trade payable. Plus increase in outstanding expense. This of course plus minus you can do. Very simple. Once you have understood. Chalega. This become cash generated from operation. From this will do minus income tax paid. So this will now become cash. This will become cash flow from operating activities before what? Extraordinary item. And then we'll do add compensation received from lawsuit file. Compensation received from lawsuit file. So this will be added and this will become cash flow from operating activities after extraordinary item. Understood? So whatever net amount that we show, that we write down in outer column. Outer column. Got this point? Correct. Then coming to cash flow from investing activity, they have given only two items. One, they have given sale of investment. Sale of investment. So sale of investment has been given. You can see the sale of investment was given here. It was 3,20,000. And interest received was also given here 60,000. So 3,20,000 plus 60, it will become 3,80,000 investing activities. Now cash flow from financing activity, be careful. First they have given interest payment. Then they have given redemption of preference shares at premium. At premium. The premium amount is how much? Redemption of preference shares. Just check. So they have said 15,000 preference shares of rupees 100 is was redeemed at a premium 5%. So you will do 15,000 into 105. That is coming 15,75,000. So you can see 15,75,000. It is 15,000 into 105. Chalega. The premium paid will be also what? A financing activities. Similarly, there was issue of equity shares at premium. So how many equity shares you should check karo? Equity shares, they have said 50,000 equity shares of rupees 10 is at a premium of 20%. Means 12 rupees. So we'll do 50,000 into 12. You can see 50,000 into 12 will be 60,000 and 6 lakh. 50,000 into 12 is 6 lakh. So 6 lakh will be plus. Then they have given preference dividend paid, final dividend paid, interim dividend paid. All this information are given separately. You can minus. This will become financing activities. This will become net decreasing cash and cash equivalent. Opening will be added. Closing you can find out. This is the entire thing. And one note I have given, during the year company purchased land by issuing equity shares. This is required for disclosure only. This is required for disclosure purpose. I hope you have understood. Any doubt in this question? One by one we'll take. Any doubt in this question? Batao. No sir. I hope you are understanding. Batao. If you are understanding, send me likes. Okay. You need to send me likes. Are you able to understand? Are you able to understand? Means revise all the point whatever you have done in your previous classes. Correct? So if you are liking it, don't forget to place the like button. Okay. Let us take one more questions. Come to one more question. Now we'll take one question where the balance sheet will be given. So normally we find this type of question also in exam. The balance sheet of New Light Limited as on 31st March 2001 and 2000 is given. So this is what? Closing balance sheet. This is opening balance sheet. Be careful about this. Sometimes the closing balance is given here, opening balance is given here. So be careful. First find out. Just write down this is opening balance sheet. This is closing balance sheet. Be careful about this. Now they have given share capital. So you can see there is an increase in share capital. So of course it will be which activities? Which activities? Financing activities. Reserve and surplus. Reserve and surplus. You should not think about reserve and surplus because it will not involve in any cash movement. But reserve and surplus account can be used for which purpose? To find out the net profit if the net profit is not given in the question. Long term borrowing you can see decrease. Decrease what? So it is what? Financing. This is also financing activities. This is also financing activities. Other current liability we need to see what are the other current liability. Chalega. Short term provision. So we need to short term. This is provision for tax. So you can provision for tax. So for this we need to prepare one account. Prepare one account. Ledger account to find out what is the income tax paid during the year. Then property plant equipment you can see increase. So this is a investing activities. Means this is, of course there may be some other item also. Means they can be land, building. So we need to go one by one. Non-current investment. So non-current investment you can see it is decrease. So decrease means what? Investing activities. Means there is some sale. Cash and cash equivalent. This is opening. This is closing. Inventory. Inventory you can see what happened. Increase or decrease. So this is increase. Increase means what? Minus in cash flow from operating activities. Other current asset. So this is what? You can see decrease. Decrease means what? Plus. Decrease means plus. Now share capital they have given equity share capital. Equity share capital is increase. Increase means what? Issue means what? Plus financing activities. 10% preference share capital 4 lakh 2 lakh 80,000. So there is a redemption. Redemption means what? Redemption means what? Outflow. But 10%. Now they have given 10%. So whenever the rate of dividend is given, always think about dividend paid. Even though question is silent, the preference dividend paid. Think about this. Even if question is silent. Even if question is silent. Understood? Chalega. The reserve and surplus. General reserve they are given 6 lakh become 7 lakh 60,000. So can you see there will be some transfer to general reserve? It means there is some transfer to general reserve. Profit and loss account. This can be used for what? To calculate net profit during the year. Net profit during the year means we can say this is increase in profit means this is a profit after appropriation, or you can prepare one profit and loss appropriation account also. Correct? Yes sir. 9% debenture you can see 4 lakh become 2 lakh 80,000 means this is also decrease. Decrease means financing activities, but they have given 9%. So we need to think about interest expense even if question is silent. Even if question is silent because 9% has been given. Because can I say if there is a debenture, so of course you will pay some interest for the entire year. Dividend payable you can see the opening was this and it has been what? Paid during the year. So it has been paid during the year. Financing activities. This is a financing activities. Correct? Current liability they have given 4 lakh 80,000 and 5 lakh 20,000. So you can see increase in current liability. So increase in current liability you will do plus ki minus batao. Increase in current liability you will do plus in your operating working capital changes. Correct? Understood this point? Then property plant equipment. So you can see there is an increase. So there may be some plus and there is a depreciation. So you need to prepare one property plant and equipment account and accumulated depreciation account to find out how much purchase and how much sale during the year. That depend upon additional information. Company sold one property plant equipment for rupees 1 lakh. The cost of which was 2 lakh and the depreciation provided on it was 80,000. So for this you need to prepare one property plant and equipment account. So whenever some additional information is given, always prepare one account because on working note also you have marks. If you are not preparing account and you are doing directly, so of course they may deduct your marks also. So you may do directly also, but that may be dangerous from scoring of marks. The company also decided to write off another item of PP costing rupees 56,000 on which depreciation amounting to rupees 40,000 has been provided. So for this also will prepare PP account. Yes sir. Depreciation of PP during the year is 3,60,000. For this of course we will do PP account. So 1, 2, 3 is related to PP account. Then company sold some investment at a profit of 40,000. So you can ignore or you can prepare one investment account. So we can prepare one investment account. So you can see investment. If you go to investment, you 4 lakh become 3 lakh 20,000. So it means 4 lakh become 3 lakh 20,000. So what is the carrying amount of the investment sold? It is 80,000, the carrying amount, and it was sold at a profit. So 80,000 was sold at a profit. So 80,000 plus 40,000, can you say that it becomes sale proceed? So sale proceed become how much? 1 lakh 20,000. Directly also you can do, or you can prepare one account. Debentures and preference share capital are redeemed at 5% premium. It is redeemed at 5% premium. Debentures were redeemed at year end. Correct. Now, even though question is silent about preference share, we'll assume both redemption has been done at year end. So, if the question is silent, always assume redemption has been done at year end. Correct now. So, if nothing has been given, assume for preference shares also redemption has been done at year end. At year end. At year end. Correct. And so, but redemption has been done at 5% premium. At 5% premium. Correct. Can you say premium on redemption debenture and premium on redemption preference shares? If nothing has been given, that it means that has been written off through PL account. That has been written off through PL account. So be careful about that also. Be careful about that also. Chalega. Now company decided to value inventory at cost, whereas previously the practice was to value inventory at cost less 10%. The inventory according to books on 31st March 2000 was 2,16,000 and the inventory on 31st March 2001 was correctly valued at 3 lakh. Means what they are saying, opening stock was not correctly valued. What they are saying, previously there was a practice to value inventory at cost less 10%. Means can you say this is 90%? So what is 100%? Batao, 2,16,000 divided by 90 into 100 means the correct value is 2,40,000. Correct value is 2,40,000. Means I have taken a good question. I have taken a good question. Means opening stock of last year was not correctly valued. Opening stock, sorry, closing stock of last year was not correctly valued. That become opening stock of current year. So opening stock was undervalued. Opening stock was undervalued. Means you need to increase the opening stock. Can you say if you increase your opening stock, our profit will decrease? Means current year profit will decrease. Current year profit will decrease. So if you increase, so what is the difference? So 24,000. So can you say you should decrease your profit of current year by 24,000. You should decrease the profit of current year by 24,000. Correct. I will again explain this, but I hope thoda you have understood. So can you see if the opening stock you will increase, so of course your profit of the year will decrease. Correct, because opening stock will increase, so your expense will increase because opening stock को debit करते हैं in trading account. So if opening stock will increase, your profit will decrease. Your profit will decrease. If closing stock will increase, so your profit will increase. Your profit will increase. So this is the opening stock का current year. So current year profit will decrease by how much? 24,000. Have you understood this much? Correct. So this is the entire thing. Correct. So what I will suggest that first prepare relevant account. First prepare relevant account because in all we have some marks. So first we'll prepare relevant account. Yes sir. Let us come to that questions. We are doing question number 1 minute. Yeah, this is the question. So first we'll prepare PP account. So you can see PP, they have given opening balance 32 lakh and 38 lakh closing balance, and depreciation they have given opening balance 9 lakh 20,000, closing balance 11 lakh 60,000. So whenever they have given accumulated depreciation, prepare two account, PP account and accumulated depreciation account. Correct. So you can see I have prepared PP account and accumulated depreciation account. In this already I have written opening balance 32 lakh, opening balance 32 lakh and closing balance 38 lakh. In this we have written opening balance 9 lakh 20,000 and closing balance 11 lakh 60,000. This you have understood. Bolo. Correct. Now we'll go to some additional information. Point number 1. The company sold one property whose cost is how much? Whose cost is 2 lakh. Accumulated depreciation was 80,000 and which was sold at rupees 1 lakh. So whenever you sell, can I say first accumulated depreciation will be closed but transferred to which account? PP account. So can I say we'll pass one journal entry accumulated depreciation account debit to PP account with this 80,000. With this 80,000, correct. So what journal entry we have done, check करेंगे कि accumulated depreciation account will be debited to PP account and PP account will be credited. So you have done 2 PP and by accumulated depreciation account. Then it was sold at rupees 1 lakh. It was sold at rupees 1 lakh. So journal entry is bank account debit to PP. So bank account debit to PP 1 lakh. Correct. Now what was the cost price? Cost price was 2 lakh. Cost price कितना था? 2 lakh. What was the depreciation? 80,000. It means the carrying amount is 1,20,000. Was sold at 1 lakh. It means there is a loss of what? 20,000. So this loss will be also accounted. Towards journal entry loss on sale account debit to PP. So PP will be credited with loss on sale. So loss on sale, what will do? 20,000. This is the posting. Posting, have you understood? Have you understood the posting? Just see the yellow one. Wherever I am doing yellow, just see the yellow highlighter. Have you understood this much? Have you understood additional information? Point number 1, the posting part. Yes, sir. Now coming to second additional information, what they have given. The company also decided write off. Write off means discard कर दिया. Means it is not sold, it is discarded. Whose cost price is 56,000 on one which depreciation amounting to rupees 40,000 has been already charged. So once again, can you discard it? So you need to first eliminate accumulated depreciation account. So accumulated depreciation to PP account. What journal entry you have done? Accumulated depreciation to PP. 40,000 will be debited to accumulated depreciation account and PP account will be credited with what? 40,000. Correct. Now what is the WDB? What was the cost price? Cost price was 56,000. Correct. 40,000 is depreciation. WDB becomes 16,000 and there is no sale. No sale, so loss becomes 16,000. So this loss will be charged to PL account. So once again, loss on written off, loss on PP discarded or written off 16,000, and this will be also transferred to PL. Understood? Correct. Now you can see you need to find out the balancing figure of this particular account. The balancing figure will be 8,56,000 and this is what balancing figure means. This is purchase during the year. Purchase during the year. So the information of this was not given in the question. So we'll assume that whatever is balancing figure that become purchase during the year. And for this, can you say balancing figure with depreciation? However, depreciation is given in the question only. You can see depreciation is given how much? 3,60,000. Even not given, it can be calculated as a balancing figure of this account. It can be calculated as a balancing figure of this account 3,60,000. This circle means what? Balancing figure. So you need to find out missing information from this account. Missing information from this account. Can you say directly also you can do, but the high chance of the mistake. And then also if you are doing directly, you will not be given marks because all working note have the marks also. Have you understood this? Correct. Now once you have prepared account, then you need to find out what adjustment you need to do. Now whenever you are using indirect method, so whenever bank means inflow outflow and PL means adjustment in operating profit calculation. Means just try to understand. मेरी बात समझना. This depreciation has been transferred to PL. So this will be added in operating activity. This will be added in operating activities. Correct. I am writing OA. Correct. And you can see nothing is there. Now this bank is in investing activities. This loss on sale already debited to PL, so this will be adjusted in operating activities. This loss on sale has been transferred to PL, will be adjusted in operating activities, and this bank is an investing activities, will be minus in investing activities. This is the entire conclusion of this part. Means loss on sale of PP or loss on writing of the PP is already transferred to PL, but that is the investing means non-operating expense, therefore adjusted while calculating operating profit. Similarly, depreciation is a non-cash item, will be adjusted while calculating operating profit. Chalega? Understood? Now we can prepare one investment account. However, investment account was very easy. You can see opening balance was given 4 lakh, closing balance was given 3 lakh 20,000, and there was some sale at a profit of 40,000 is given. So that profit means what? Investment account debit to profit. The profit on sale transfer to PL 40,000, and automatically this will come as a balancing figure. So this will come as a balancing figure. So balancing figure means bank. What is the sale process? 1 lakh 20,000. Already we calculated this. So this will be which activity? Investing activities, and this will be adjusted while calculating operating profit. Chalega. Correct. Dividend payable, this account was not required. In class to explain this I have explained कि opening balance was given and nothing was given in the closing balance. So whatever opening balance there, that will be assumed, that will be deemed to be paid during the current year. So this 1,20,000 will be paid during the current year. Then because the profit has not been given, can I say we can prepare one PL appropriation account? We can prepare one PL appropriation account, or you can do directly in what? Operating activities also. I will always say that prepare PL appropriation account, that is more easy to understand. So what is the opening balance given? 2 lakh 40,000. What is the closing balance given? 3 lakh 40,000. 1 minute. So opening balance was given how much? 2 lakh 40,000. Closing balance is given 3 lakh 40,000. Correct? Understood? Correct. Now, okay, there is one transfer to general reserve. Transfer to general reserve is given. If you see, the transfer to general reserve is what? So come to general reserve, 6 lakh becomes 7 lakh 60,000. So it means 1 lakh 60,000 has been transferred during the current year. So you can add on 2 general reserve. 2 general reserve, 1 lakh 60,000. 2 general reserve, 1 lakh 60,000. Then there is one preference dividend paid. So preference dividend paid, so it is what? The rate of dividend was 10%, and now we have assumed that all the preference dividend has been paid at the end of the year. So at the end of the year, so can I say in entire preference years dividend will be paid, because that has been paid at the end of the year. You can also assume at the beginning of the year, but if the question is silent, always assume that this in that preference dividend has been paid at the end of, means repaid at the end of the year. So you will calculate preference dividend on 4 lakh. 4 lakh ka 10% is 40,000, that is paid during the year. That is paid during the year. So preference dividend, that is implied. So whenever rate of dividend is given, that is implied point. You need to do by your own. You do by your own, even though nothing has been given in the question. Correct? So preference dividend paid is 40,000. The preference dividend paid is 40,000. So net profit is coming how much? Net profit is coming how much? Check karo. It is coming how much? 3 lakh. So this will be balancing figure. But can I say this will be incorrect profit? This will be incorrect profit. Why incorrect profit? Because there was some adjustment in stock. Stock was need to corrected. But can I say this is one incorrect profit? This will be incorrect profit. So how to correct it? To correction of error. Correction of error. So opening stock of current year is understated by 24,000. That already I have explained. 2,16,000 was 90%. So how much? 100%. Or you can say 2,16,000. Correction is 10%. 10 by 90 kar do. So that is understated by 24,000. So due to correction of such stock, profit of current year will decrease or increase? Batao. If the opening stock will increase, so your profit will decrease. So your profit of current year will decrease by 24,000. It means the correct profit will be 3 lakh minus 24,000. 3 lakh minus 24,000. That is 2 lakh 76,000. That is 2 lakh 76,000. Debenture interest. Yes, debenture interest will come. The debenture interest is debited to PL account, not to PL appropriation account. Debenture interest will be adjusted in PL account or PL appropriation account. This is PL appropriation account. This is PL appropriation account. Means debenture interest is deducted in statement of PL, not in PL appropriation account. Understood this point? There is a difference. Understood? Understood? I mean, right now we are calculating profit after tax. Net profit means profit after tax. Be careful. Profit after tax. So debenture interest will be debited to PL account and preference dividend paid will be debited to PL appropriation account. Okay, sir. Okay, sir. Now your, can I say, your correct profit will become 2,76,000 and your correct opening stock will become 2,16,000 plus 24,000, that is 2,40,000. Have you understood this correction? This is very important point. Normally this type of point is asked in exam, but have you understood this point? Have you understood this point? Bolo. I hope you have understood. This also you have understood? Correct. Now we can prepare cash flow statement. So you can see we have done all working note. Now we can prepare cash flow statement. Are you ready for that? Are you ready for that? Bolo. So we'll start with cash flow from operating activities. Net profit corrected is what? 2,76,000. 2,76,000. Corrected is what? 2,76,000. Correct. Now we'll add back tax expense, add back tax expense. Now just try to understand. You can see they have given one provision for tax. They have given one provision for tax account and no information, no additional information has been given. So whenever provision for tax account is given without additional information, so we'll assume opening balance, it means that was provision created last year and that is paid in current year. And closing balance is the provision for tax, means that become a tax expense of current year. Means let me explain what they want to say. Provision for tax account, if I prepare provision for tax account, so they have given opening balance how much? 3,60,000 and they have given closing balance how much? Opening balance is given 3,40,000 now. 3,60,000 and closing balance they have given 3,40,000. And you can see no information has been given for this, means how much tax paid, what is the tax expense, nothing has been given. So in this we'll assume that this was paid during the year. We'll assume this is paid during the year. Means the opening balance means last year tax expense paid in current year, and closing balance it means that is created during the year. So 3,40,000 become the tax expense of the current year which has been debited to PL. This will be our general assumption as per this chapter. As per this chapter. Understood this point? Have you understood this point? Correct. So we can do without account. If no additional information has been given, we can do without account. And you can see tax expense, how much has been added back. So what is the closing balance that has been added back? Means that is the tax expense of current year. That is the tax expense of current year. And this will be considered payment during the year, which will be shown as a last item. Last item. Understood this point? Bolo. Have you understood? Bolo. So this will become profit before tax 6,16,000. This become profit before tax. Bolo. Any doubt? Yes, sir. Now we'll do adjustment. So adjustment, let us come to PP account. There was one loss on sale of PP added back. There was one loss on writing of PP, that will be also added back. Yes or no? There was one depreciation during the year, that will be also added back. Then come to investment account. There was one profit on sale, that will be deducted. Profit on sale will be deducted. Profit on sale will be deducted. Any more item is there? But any more item? Can I say there is one debenture interest? Debenture interest will come. So debenture interest is what? So once again come to debenture account. Debenture account. So debenture account is how much? You can see debenture is how much? 9% debenture. So we have, it is given the question that redemption has been done at the end of the year. So 4 lakh into 9%. So 4 lakh into 9%, how much? That will become your interest expense. So interest expense become 36,000. So you will add back debenture interest expense 36,000. Add back in debenture interest expense. And then there is one premium or redemption debenture and premium of redemption preference shares. Okay, that need to be also taken into account. So that premium, whatever extra amount has been paid, that will be a loss, and that loss is also written off. that loss is also written off. So you can say premium redemption of preference shares, premium redemption debenture. So what is the amount of premium that we need to calculate? So what is the amount of preference share redeem? So you can see 4 lakh minus 2 lakh 80,000. 4 lakh minus 2 lakh 80,000. So it is how much? 1 lakh 20. 1 lakh 20 ka how much premium? Premium is 5%. That is coming 6,000. Same is for debenture. Same is for debenture. So you can see I have written premium on redemption of preferences 6,000 added back because loss is written off. Loss is written off through PL account. So added back. This is also added back. This become operating profit before working capital changes. This become operating profit before working capital changes. Up to this, any doubt? देखो I have taken a very good question. हाँ, in exam normally this type of question they don't ask. They ask very simple. So I have taken one good question so that all the points are covered. Have you understood this much? Yes sir, very good. Now, okay, so now working capital changes will need to be considered. So already I have done. There are, what are the item given? Check karo. What are the item? One is current liability given. Current liability, there is an increase in current liability. So increase in current liability will plus. So we have done, देखो check करो, plus we have done increase in current liability, we have done plus. This is also done. Now let us come to current asset. So in current asset, what are given? Check करें current asset. May if you go to balance sheet to inventory में there was increase, that will minus, and other current asset there was decrease, that will plus. So you can see increase in inventory will do minus. So you can see increase in inventory we have done minus, but be careful. Can I say in this one correction has been done? Correction. So already corrected. So now your opening stock will be 2,40,000. Be careful, danger. Opening stock will be 2,40,000 and the closing stock is 3 lakh. So your increase is actually 60,000. Increase is 60,000. That only we have done. So this need to be done with corrected opening stock. Corrected opening stock. So there is a increase in inventory. So minus 60,000. This can be dangerous. This can be dangerous, and therefore when I was doing this working note, that time I have said opening inventory need to be corrected, and now it become 2,40,000. So once you have written this, now just change in the balance sheet also, otherwise you will do mistake. Otherwise you will do mistake. Okay sir, yes sir, yes sir. And then other current asset also you can do. So this become what? Cash generated from operation. From this minus income tax paid. Income tax paid means opening balance will be assumed to be paid in current year. So 3,06,000 paid. This become cash flow from operating activities. Now it become very easy. Means normally student do mistake in operating activities. I have not seen they will do mistake in investing or financing. Normally student do mistake in investing activities. So here the special point was what? One was to debenture interest. This was special point. Premium on this was special point. This was special point. And there was one correction. Correction was a special point. This all are a important point. Correct. Now let us come to investing activity. There is one purchase of PP as per working note number 1. Then there is one sale of PP as per working note. There was sale of investment as per working note. There is no other item. This become investing activities. Then coming to cash flow from financing activities, one issue of equity shares directly from balance sheet. Issue of equity shares. Then redemption of preference shares at premium. Premium is add 5%. Redemption of debenture at premium add 5%. Add 5%. Then there was debenture interest paid. Debenture interest paid already we have done. Then preference dividend paid will also come. Preference dividend paid will come. And there is one final dividend paid as per the account. Equity dividend paid 1,20,000. 1,20,000. This all done. This will be financing activities. Then find out this will come nil, means there is no changes in cash and cash equivalent. Opening balance, this will be closing balance of cash and cash equivalent, and the account done. Have you understood? Any doubt? Chalo. This also done. Can we take one more question? One question I have taken for indirect method, one question I will take for direct method. So direct method also covered, indirect method also covered. Chalega. So question 23 come. From the following information, prepare cash flow statement as per AS3 from Banjara Limited using direct method. Now, if you are using indirect method, they will kill you. चलेगा? Yes, sir. तो balance it. To read the question carefully. Whenever cash flow statement questions come, now first see direct or indirect method. Then only you attempt. चलेगा? If nothing is given, then apply your common sense and do it. You can see this is in this balance is closing balance is given here, opening balance is given here. This also is dangerous. Now cash on hand and balance. This is cash equivalent. Marketable securities having 1 month maturity. Even though this is not given now, assume this is cash and cash equivalent. So this is also cash and cash equivalent. This is also cash and cash equivalent. Data they have given. Interest receivable. Interest receivable. Inventory. Investment. Fixed asset. Accumulated depreciation. Total. This is net fixed asset. Total asset. Then sundry creditor, interest payable, income tax payable, long term debt, total liability, shareholders fund, share capital. Okay. I hope this you have understood. What is this given? Then statement of PL. So statement of PL is given now with balance sheet statement of PL. Means this question can be done both by direct and indirect method. Means if nothing is given, so you can use also indirect method also because SOPL is given. Correct. So in SOPL you can see they have given net profit before tax and extraordinary item. Means if you are using indirect method now, you can start from this. But in this question, so we are doing direct method. In this question, we are doing direct method. Chalega. So sales, cost of sales. Cost of sales means what? Opening stock plus purchase minus closing stock. Correct. Gross profit, depreciation. Depreciation is non-cash. Admin and selling expense, interest income, dividend income. Net profit, extraordinary item, insurance proceed from earthquake disaster settlement. So you can see insurance proceed from earthquake disaster settlement, but nothing has been given कि this is on account of PP or an account of what stock at such time. Nothing is given. You can assume this as an operating extraordinary operating activities. Extraordinary operating activities. चलेगा? You can assume that. Okay, sir? Yes, sir. Then income tax, this is the income tax expense, this become net profit. Additional information. An amount of 250 was raised from the issue of share capital and further 250 was raised from long term borrowing. Means this is financing activity. You can see if you go to share capital, the share capital has been increased by 250. Correct. And long term debt, you can see long term debt also increased. But you can see there is some repayment also. Means if I am saying 1040 plus 250 minus 1110, so that is repayment. 180 is also repaid. Means we can prepare one long term debt account. We can prepare a long term debt account. So we need to find out how much received and how much paid also. So that will become financing activities. So this information they have given for financing activities. Interest expense was 400, of which 170 was paid during the period and rupees 100 relating to interest expense for the prior period was also paid during the year. Means can you say what is the total payment of interest expense? 170 plus 100. So you can see 170 plus 100. So total payment is 270. Or we can prepare because they have given, you can see in the balance sheet they have given interest payable account. So if you prepare interest payable account, automatically this can be calculated. This can be calculated. But right now because we are using direct method, so this information is important. 270 is the payment during the year. Yes, sir. Dividend paid was 1200. Okay, sir. Tax deducted as source on dividend received, including in the tax expense of 300 for the year amounted to rupees 40. Means there was some tax deducted on dividend received. So any TDS on dividend received will be investing activities. So how much TDS on dividend received? It is 40 rupees. Correct now. Means some tax expense will be investing activity. That is an indication. During the period enterprise acquired fixed assets, there is a purchase of PP, the payment was made in cash. Plant with original cost 80 and accumulated depreciation 60 was sold during the year. So there is sale of PP, sundry debtors, sundry creditor include amount relating to credit sales and credit purchase only. 16 marks question they have asked. Understood? Correct. So how to do? Now one thing is clear that in this we need to find out collection from data and payment to supply. Means we need to prepare sundry debtor account and sundry creditor account. That is more important. So you can see first what I have done. I prepared sundry debtor account. So sundry debtor account, what is the opening balance? Check karo. debtor account. You can see opening balance is what? 1200 and closing balance is what? 1700. Correct? Yes, sir. 1 minute. Yes. 1200, 1700. So I have written that only. So you can see 1200, 1700. Now what is the sales given in what? SOPL? The sales is 30,650. So this is the collection from debtor. Collection from debtor. Similarly, can I say we'll prepare one creditor account? Creditor account. So you can see opening creditor given how much? 1890. Closing creditor is given 150. And what is purchase given in SOPL? Can you say purchase not given in SOPL? Cost of sales given. So can you say from cost of sales you can calculate purchase? So cost of sales given 26,000. Cost of sales nothing but opening stock plus purchase minus closing stock. To apply this equation, opening stock is given in the question plus purchase minus closing stock is given the question with inventory is equal to this. So can you see you can easily calculate purchase. So from cost of sales we'll calculate purchase and this purchase will go to creditor account. This purchase will go to creditor account because all purchases are credit purchase given the question, and this will be what? Payment made to the supplier, payment made to the supplier. Understood? So you need to prepare first debtor account and then creditor account. Got this point? Similarly, you can also, because that information is given, let us prepare an interest expense account only to explain you. Only to explain you. Interest expense account. So you can see there is interest payable, opening balance is given. This question is given in expected question. These all questions are given in expected question list. Expected question you can download from the, download from where? Download from my Telegram channel. Go to Telegram channel. There is what the link is given. Just go to that link. Automatically that expected question list you will get. Already I have said. How many times I will say? Correct. So you can see opening interest payable and closing interest payable is given. Now it is given the question how much interest paid during the year. So interest paid during the year is 270 and this is the interest expense transfer to PL. If you see your PL, in PL 400 is debited. But we require payment, but this account was not required because this information was already given the question. Suppose this information was not given the question, so this we can take from PL. You go to PL, PL में जाओ SOPL, SOPL में what is the interest expense 400, so you can take this figure from here and the balancing figure will be 270. So quite possible this information is not given the question, they need to work out. However, not required for this question because direct information has been given. Similarly, can I say interest income? You can see opening receivable and closing receivable come. Opening receivable and closing receivable come, and they have given interest income transfer to PL. How much interest income has been transferred to PL? 300. Interest income transfer to PL is 300, means how much has been received during the year. So this become balancing figure. This become balancing figure. This is the interest income received during the year. Interest income received during the year. Understood this point? Have you understood this point? Correct. Have you understood these two account, interest expense account, interest income account? So can you say for direct method, this bank is more important ki what is paid or what is received? What is paid and what is received? Got this point? Now coming to income tax payable, this is very important account for this particular question. So this is the opening balance given, this is the closing balance given, it is given in the question only. Opening balance and closing balance has been given. Now they have said that TDS to the extent of 40 is related to what? TDS whatever is deducted in current is related to investing activities. So what is the TDS? TDS 40 rupees is already deducted. So this you can add 2 TDS already paid. Already paid. Correct. You can add on 2 bank. You can add on 2 banks separately. 2 bank separately. Understood? And can I say whatever has been debited to PL is 300, this is from SOPL account. So automatically this will be balancing figure and this will be related to operating activities, or you can say this is the total balancing figure. The total balancing figure is what? 860 plus 40 is what? 900. The total balancing figure 900. Out of this 40 is related to investing activities and 860 is related to operating activities. This is a special point in this question. Have you understood this point? Bolo. Have you understood this point? Income tax payable you understood. Now we can prepare one long-term debt account, however not required. If you want to prepare, opening balance is given how much? 1040. Closing balance given how much? 11110. Now it is given that loan received during the year is 250. So the balancing figure is loan paid during the year. This become loan paid during the year. Chalega? Yes, sir. Correct. Now we'll prepare one more account, PP account and accumulated depreciation account. So for PP account, they have given what? Opening balance and closing balance. For accumulated depreciation, they have given opening balance and closing balance. Correct. Now it has been given that during the year one PP was sold. One PP was sold. What information they have given? One PP was sold. Ki plant with an original cost of 80, accumulated depreciation 60 was sold for rupees 20. So accumulated is 60, so that will be eliminated. So you can say accumulated depreciation account debit 60 to PP account credit 60, and it was sold at which price? 20. So by bank 20. So you can see the cost price was how much? 80. The cost price was 80 minus 60, carrying amount is 20 and sold at 20. So there is no gain or loss. There is no gain or loss on sale of PP, and that is purchased during the year is given 350 in the question. You can see it is given the question ki purchase of PP how much? 350. That is given the question to cash or bank 350. So automatically there is no balancing figure, and this depreciation is also given as OPL. So you can avoid this account. Means because all the information was given the question, you can avoid this account. I am just explaining some of the missing figure, how to calculate as missing figure. Suppose this is not given, so this will be calculated as missing figure. All the account is done. Now we can prepare what? Cash flow statement. Cash flow statement, come to cash flow statement. Now it become very easy. Direct method. So again, receipt from customer as per debtor account, payment to supplier as per creditor account. Now let us come to SOPL. Once you have done this, let us come to SOPL. Correct. Now SOPL. Again, this we have done, this we have done. Depreciation will not come. Now admin and selling expense, nothing is given. We'll assume entire is paid. So admin and expense 910 is paid. So 910 paid. If nothing has been given, so we'll assume it is paid. It is paid. Correct. Then what is given? Interest expense will not come. Interest income will not come. Dividend income will not come. Tax expense will come as a last item. So this become cash generated from operation. Cash generated from operation. From this will do minus income tax paid. So it was 860 as per working note. Income tax paid 860. This will become cash flow from operating activity before extraordinary item. Then minus, you can say plus insurance claim received on account of disaster, whatever. So that is 140 you have received. 140 you have received. You can see that is given as a separate now. Disaster 140. So you'll assume this has been received, and that will become what? Net cash flow from operating activities. Now coming to investing activity, purchase of PP, sale of PP. Correct. Purchase of PP, sale of PP, interest received. Interest received is given the question. Correct. Then interest received you have calculated what? You have calculated by one account. Interest received, you have prepared one account. Dividend income, nothing is given. That is means it received 200 received. Dividend income received, and then dividend income is what? 200. So TDS on that dividend is how much? 40. So that will be shown separately by way of minus. So TDS how much? 40. So you can see actually dividend income was 200 and TDS deducted was 40. So actually you have received 160, but in your cash flow statement the gross income will be shown and the tax will be shown as a separate item. Chalega? Have you understood this point? Yes. Then we'll come to financing activity. Issue of share capital given, long-term borrowing proceeds, repayment of long-term borrowing, then interest payment 270, then there is one dividend payment. Dividend payment is also given in the question as a separate information. If you remember, dividend payment was given how much? 1200. To 1200 will be paid, and this will be what? Cash flow from financing activity. This will be increased. Then cash and cash equivalent, to be careful in this there are two components of cash and cash equivalent. One is cash and bank balance, one is marketable securities. So opening will come, closing will come, and you to also show the component of cash and cash equivalent. So opening and closing write down as a working note. Cash and bank balance and marketable security, this become opening, this become closing. This also disclosed as a part of working note. Understood? Done. This question also does. So I have taken one direct, one indirect. I hope you have understood. I have taken good question only. Ki how to do direct, how to do indirect. Have you understood? Any doubt? No, sir. Now let us complete the balance part of this chapter. Some special point. Come to special point. Special point is what? Operation of financial company, bank and NBFC. Means normally they don't ask any cash flow statement of banking company or NBFC, but they can ask this type of question in MCQs. Ki if suppose you are preparing cash flow statement of banking company or financial company, so can I say their main business is to give to their main business to take deposits and invest that. So whatever was the investment activity for a normal business, that will become operating activity for that. So investment in shares etc. for this type of companies will become investing activities. They have given purchase and sale of investment in shares or other securities will be operating activities for this company. Cash advance or loan given, that is their business only operation, that will be operating activities. Any interest received on such investment or such loan, so any interest received will be operating activities. Any deposit from public, whatever deposit you are receiving from public, that will be operating activities. And any interest paid on deposit will be operating activities. So you can see normally for other company, this was investing activity, this was investing activity, this was investing activity, this was financing activity, this was financing activities. But for banking etc., this will become this. Correct. Similarly, interest and dividend. For financial company, for other company, interest paid, here it will be operating, but here it will be financing. Interest received, here it will be operating, here it will be investing. Dividend received, here it will be operating, here it will be investing. But be careful, dividend paid by both type of company on share capital. So dividend paid for both will be financing activity. Be careful about this point. Understood? Have you understood this point? Yes, sir. Correct. Then taxes on income. Taxes on income. What they have given? They have given taxes on income is normally classified as operating activity. Means if question is silent, taxes will be always operating activities. But they can be specifically identified as financing or investing activities. For example, already we have done TDS on interest received or dividend received will be investing activities. Tax paid on long-term capital gain. Suppose you have sold some investment property or property and you have paid tax on that. So on sale of PP etc. if you are paying some tax, correct now, so that will be also investing activities. Chalega. Or dividend distribution tax paid. Now this concept has been withdrawn from Income Tax Act. Previously on dividend, company need to pay some income tax. That was known as dividend distribution tax. So if you are paying any tax on dividend paid, so that is financing activity. But now this point has been deleted from Income Tax Act. So this will not be asked. Chalega. Non-cash transaction already I have explained. Ki investing or financing activity that does not involve the movement of cash and cash equivalent shall be excluded from statement of cash flow. Examples are conversion of debenture into equity, acquisition of asset or business by issue of shares or debentures, acquisition of asset or business by issue of shares or debentures. So this non-cash transactions should be disclosed by way of notes to statement of cash flow. Already I have explained. Foreign currency cash flow. This one is special point. Now this point is related to AS11. AS11. So there are 2 points. However, till now they have not asked any question of foreign currency cash flow. So from my point of view, not important from exam point of view, but suppose they ask, so what to be done? So foreign currency cash flow. Let me take one example. Suppose on 1/4, yeah, on 1st Jan, you have done one sale. Debtor account debit to sales in foreign currency. Suppose 10,000 debtor. And at this point of time, exchange rate was $1 is equal to 80. So this become 8 lakh. This become 8 lakh. Now suppose on 1st Feb you collected, on 1st Feb you collected 6,000 debtor, $6,000. So bank account debit to debtor you write down, and you collected 6,000 $6,000, and at this point of time the exchange rate was $1 is equal to 82. So you will collect 82. So 6,000 into 82, how much? 4,92,000. But okay, your debtor was recorded as 8,000 into 80. 8,000, sorry, 6,000 into 80. It was initially recorded as 6,000 into 80. So it is nothing but 4,80,000. So there is a gain. Gain is how much? So 2 exchange gain, and as per AS11 this will be transferred to PL account. So this become gain. How much? Gain is what? 8,000 into 2, that is 16,000. Sorry, 6,000 into 2, that is 12,000. So 12,000 is the gain. Gain will be transferred to PL. Now on 31st March, how much remain uncollected? 4,000. It is what? 4,000 is uncollected. So as per AS11, this need to be recorded at closing exchange rate, if you remember. So suppose now the rate become $1 is equal to 85, let us say. So can I say the debtor was initially recorded 80, but now the rate become 85. So there is increase in debtor, that is also a gain. So we write on exchange gain transfer to PL. So debtor will increase by how much? Debtor will increase by how much? And that will be an exchange gain transfer to PL. So debtor will increase by, so what is the closing balance of debtor? $4,000, and 80 now become 85. So there is a gain of 5. So 4,000 into 5, how much? 20,000 become gain. 20,000 become gain. Correct. Understood. Now if you are using direct method, then there is no doubt. Okay, in direct method, what is the collection from debtor? 4,92,000. So if you are using direct method, the collection from debtor is 4,92,000 as per the transaction date exchange rate. Means when you have collected, then what was the rate? As per that you will convert your foreign currency into local currency. Correct now. So if you direct method, no doubt, I think you have understood. But indirect method, just try to understand. Indirect method, everyone. In SOPL, if you prepare SOPL, 1 minute. If you are preparing SOPL, so the sales will come how much? Sales will come 8 lakh, and exchange gain will be how much? It will be 12,000 plus 20,000, that will become 32,000. So what in AS3 want to say? Ki this is unrealized exchange gain. This is realized. You can see this has been collected, but this remain uncollected. This is unrealized. So unrealized cash flow, unrealized exchange gain is not cash flow, and therefore KNSF will be eliminated to calculate operating profit. So when you are calculating operating profit, you will eliminate any unrealized exchange gain or loss. You will eliminate unrealized exchange gain or loss. Have you understood this point? This was the concept. So now you will understand. However, no question has been given of this nature, so I will not give much time on this, because I know this type of question they will not ask. But if you know the concept, you can do it. Chalega? Okay. So what was the concept? Cash flow arising from a transaction are recorded at transaction date exchange rate. Correct. Unrealized exchange gain or loss from the changes in foreign exchange rate are not cash flow, and therefore it should be eliminated while calculating cash flow from operating activity by using indirect method. Understood? Have you understood this point? With this we completed all the concept of this chapter. All the concept I have taken. Only one more question, if you'll say me, I can do it. 26. In this there is one special point, that point also I like to take. But have you understood this much? Let us read this question. From the following balance sheet and information, prepare cash flow statement by using indirect method. You can see share capital increase, reserve and surplus, okay. Long term borrowing, you can see first you see this is closing, this is opening. अच्छा this is closing, this is opening, ठीक है ना. तो closing. So you can see here share capital is decreasing. So we need to see the notes to account. Long term borrowing, you need to see notes to account. Trade payable, it is what? Trade payable. So this is opening closing. So there is an increase in trade payable. Plus other current liability, decrease in other current liability, minus. Then they give short term provision for tax. Provision for tax is given this. Okay. Property, plant, equipment, okay. Non-current investment, you can see there is a sale of non-current investment. Inventory, you can see there is a increase in inventory, means minus. Trade receivable, there is an increase in trade receivable, minus. Cash and cash equivalent, other current asset, you can increase, means minus. Then there is share capital. So equity share capital, there is increase. So issue of equity share capital, correct. 10% redeemable preference share capital, it is redeem. So redeem at the end of the year, will assume redeem, and 10% the preference dividend paid will also come. CRR, so CRR opening balance was 0 and 1 lakh. So CRR is created. So when you prepare PL appropriation account now, so the CRR will be created from PL appropriation account, or it can be assumed to prepare from general reserve also, whatever you want to assume. Capital reserve opening and closing, interesting. General reserve account, you can see changes. Profit and loss account, there is changes. 9% debenture, you can see there is issue of debenture. So for debenture, you can assume it has been issued at the beginning of the year. It has been issued. So always assume the question is issued at the beginning and redeem at the end. These are general assumption. Issued at the beginning and redeem at the end. So issued at the beginning, to 9% debenture interest will also come. Dividend payable, you can see the opening was paid. So this is paid during the year. Liability for expenses, means liability for expense payable. So there is an increase in liability. So increase in liability means what? So other current liability in the balance sheet, there was some note given. So be careful about that. So you can see there was some note given. So don't take increase or decrease of this. Okay. So other current liability, there is an increase. Increase means what? Plus property, plant and equipment given, land and building they have given. Okay. A piece of land has been sold out for rupees 1,50,000, cost rupees 1,20,000, and the balance land was revalued, and the revaluation was transferred to capital reserve. Means they are saying any capital reserve consists of profit on revaluation of land. Means revaluation profit was not transferred to revaluation reserve, it was transferred to capital reserve. So we'll do according to the information given in the question. On 1st April 2000, a plant was sold for rupees 90,000. Original cost was 70,000. WDB was 50,000. And debenture worth rupees 1 lakh were issued at part as a part consideration of plant of 4.5 lakh acquired. Means what they are saying, ki on purchase of plant worth rupees 4.5 lakh, debenture worth rupees 1 lakh was issued. Means out of 2 lakh debenture, whatever was given in the balance sheet, 1 lakh was non-cash transaction, because that was issued for the purchase of asset. Then part of investment cost rupees 50,000 was sold for rupees 70,000. Okay. Pre-acquisition dividend received was adjusted against cost price of investment. Means there was some pre-acquisition dividend received. If you know AS 13, so AS 13 says that pre-acquisition dividend will be adjusted with investment account, and post-acquisition dividend received will be adjusted with PL account. And this is the information. Interim dividend was declared and paid at 15% during the year. Income tax liability for the current year was estimated to 1,35,000. Depreciate at the rate of 15% has been charged on plant and machinery, but no depreciation has been charged on building. But no depreciation has been charged on building means it will be assumed that this whatever changes was for the purchase of land or revaluation, you can say. Correct now. So no depreciation was charged on building. So as per the information we'll do, no depreciation on building. We'll assume that. Chalega? Correct. Now, in this, I will need to explain account. Good question. So, can we prepare account one by one? So, can I say just try to understand? First, we'll prepare land and building account. Land and building account. Opening balance is how much given? Check karo. Land and building. So, opening balance 2 lakh. Closing balance 1,50,000. Then the piece of land was sold at 1,50,000. Cost rupees 1,20,000. Means there is a profit of how much? There is a profit of how much? 30,000. And balance land was revalued. Balance land was revalued. Okay. So we can prepare land and building account now from this information. So land and building how much given? So opening balance given how much? Opening balance given 2 lakh. Closing balance given 1,50,000. A piece of land was sold at rupees 1,50,000. Profit was 30,000 transferred to PL account. And can I say balancing figure will be revaluation, and the revaluation was transferred to capital reserve. And you can see in capital reserve the closing balance 70,000. So that account is also done. There is no need to prepare capital reserve account. Means capital reserve is entirely due to revaluation profit. A non-cash transaction, ignore capital reserve account. Understood? Can you say this will be adjusted from operating activities? This will go to investing activity. Done. Chalega. Then plant and machinery account. So opening balance is given, closing balance is given. Correct. Come to what? Plant and machinery additional information. What they have given. Ki plant was sold for rupees 90,000. Original cost 70. WDB is 50. So because in this question accumulated depreciation account is not given, there is no need to prepare depreciation or accumulated depreciation account. So 70. WDB is what? 50. 50 was sold at what? 90. So it means there is a profit of how much? There is a profit of how much? 40,000. Debenture worth rupees 1 lakh was issued as a part consideration of plant acquired 4.5 lakh. So 4.5 lakh, 3.5 lakh will be paid in cash, and 1 lakh will be issued in the form of debenture. Let us prepare plant and machinery account. You can see ki it was sold at rupees 90,000. Profit of rupees 40,000 transferred to PL account. Then how much cash paid for purchase? 3,50,000. Correct. And how much debenture issued? 1 lakh. 1 lakh. And depreciation will come as a balancing figure. This will come as a balancing figure which will be transferred to PL. Okay, this will be adjusted in operating activities. This will be adjusted in operating activities. This will go to investing activities. This will go to investing activities. Chalega? Yes, sir. Yes, sir. Now let us come to investment account. Opening balance will come and closing balance will come. Now let us come to information. What they have given information about investment. Information about it. So the part of investment was sold for rupees 70,000. So 50,000 cost, sold rate to be 70,000, and pre-acquisition dividend rupees 5,000. Correct. These are two information. So it was sold at rupees how much? Batao. It was sold at rupees 70,000. It was sold at rupees 70,000. This wrongly piece dividend will come here. It was sold at rupees 70,000. Profit become 20,000. 20,000 will be transferred to PL. And pre-acquisition dividend received. So bank account debit investment. So that is what? Dividend received. But can you say this has not been transferred to PL account? This is adjusted with what? Investment account. So this will not be affected. So you write on buy. You writing buy dividend or buy cash. Write on better, write on buy bank. Understood? This is pre-acquisition dividend received. And can you say this will be the closing balancing figure? 25,000 will be assumed to be purchased during the year. Purchase during the year. Correct. So this will go to investing activity. This will also go to investing activity. Dividend received. This will also go to investing activities, and this will be adjusted for operating activities. Chalega. Capital reserve account is not required. General reserve account. You can see general reserve account if you want to prepare opening balance, closing balance, and you can see CRR is nothing but created from general reserve account. So CRR also not required. It is created from general reserve account, and there is no transfer from PL to general reserve in this particular question. Dividend payable also you can do. Opening balance is given. Closing balance is not given. Correct. Now it is given dividend paid during the year. Means, sorry. What information has been given? Let us read. They have given interim dividend was declared and paid at a rate of 15%. So 15% of is how much? 15% of share capital. Equity share capital. correct. So you can see 5 lakh becomes 6 lakh. So we'll assume 6 lakh, 1 lakh has been issued during the year. During the year, at the beginning of the year. At the beginning of the year. So 6 lakh into 15% means 90,000 is interim dividend paid. So interim dividend paid become how much? You can see dividend payable account. So are you getting what I'm saying? So interim dividend which is will be appropriated. So you will pass one journal entry PL appropriation account, means you can add on interim dividend paid or whatever. So PL account which is paid during the year will be appropriated during the year. So this will be also paid, means this is final dividend paid and this is interim dividend paid. The total payment is what? 1,50,000. So you can see this is final dividend paid, this is interim dividend paid. The total payment is 1,50,000. Better I will say prepare two account. Means this is nothing but opening balance was paid during the year. So this is final dividend paid. And interim dividend paid during the 90,000. So total payment of dividend is 1,50,000. Then we'll prepare one provision for tax account. Opening balance is given, closing balance is given. Now it is given the question that 1,35,000 is tax expense. So that is PL account. So what is the payment during the year? Payment during the year is 1 lakh. That is the tax paid during the year. Tax paid during the year. Correct. Understood. Other current asset account, why they have prepared this? This is not required. This is not required because this will come as increase or decrease. Have you understood this entire point? Now you can find out the profit before tax by preparing this. Means you can prepare one PL appropriation account. Better you prepare one PL appropriation account. So if you prepare one PL appropriation account, but the opening balance of PL is given how much? 50 and 1 lakh. So 50,000 will be opening balance, 1 lakh will be the closing balance. Interim dividend paid is what? 90,000. Correct. Now preference dividend paid they have not considered. We can consider it because preference dividend paid will also come. Correct now. So if you are not taking this, it means it is not correct. So you can see preference dividend has been redeemed. So we'll assume it has been redeemed at the end of the year. So you can say 2 lakh ka 10%, 20,000 is also preference dividend paid. They have not considered, you can consider it. Because when they have given dividend rate, so of course we will take that assumption. Or you can assume that it has been redeemed at the beginning of the year. If you assume it is redeemed at the beginning of the year, then no preference dividend for current year. But better to assume at the end of the year, to redeem at the end of the year, issued at the beginning of the year. Correct? So that should also come and you can prepare the account. I hope you have understood everything. Just do this question by your own. I think you can do it. Means I have just explained all the account, you can do it. I hope you have understood this. Of course, I also require break. I need to complete this because after break I'll do AS1 and AS2. I need to complete AS3. Now the AS3 is completed from my point of view. I also require break. Don't worry. Correct? So 3 hours we have taken to complete AS3 only. So I hope you have understood. Chalega, we'll take a break now. AS3 is completed from my point of view. AS3 cash flow statement is completed from my point of view and I hope you have understood everything. Correct. So we'll resume the class at 3 p.m. 3 p.m. Madam. Break. And what are the coverage? We'll take AS1 and AS2. Hello. Now, everyone, can we start once again, everyone? Now, before break, we have completed AS3 cash flow statement. I hope you have understood. Now, after break, we'll take AS2 and AS1. We'll start with accounting standard 2. Let us start. So, AS2 is what? Valuation of inventory. Valuation of inventory. What is the scope of this chapter? That this AS2 is applicable to all types of inventory except following. Means following are not covered in this chapter, is not covered under accounting standard 2. Okay, what are not covered? Work in progress arising under construction contract. Means any WIP under construction contract will be covered under AS7. Okay, work in progress arising in the ordinary course of business or service. Suppose we are providing services and that service is not yet completed, so that is known as work in progress arising under services contract. So that is also not covered in this AS2. Okay. Any shares debentures as a financial instrument held as a stock in trade. For example, our ordinary business is to purchase and sell the equity shares or debentures of any company. Means we are doing trading on shares or debenture. Then can you say there are nothing but stock in trade? So they will meet a definition of inventory, but that is outside the scope of this chapter, means that will not be covered in this chapter for valuation purpose. So they are valued actually at lower of cost price or fair value. So their valuation is done at cost price or fair value, whichever is lower as per the requirement of AS13. Basically there are that will be covered under AS13 to the extent they are related to current investment. Chalega. So this will be covered under AS13. Then producer of producer inventories of livestock, agricultural and forest product and mineral wires, ores and gases to the extent they are measured at NRB. So normally agriculture produce forest product, livestock, mineral wires or any other natural resources, they are also not covered in this chapter to the extent they are measured NRB. To the extent they are measured at NRB. Normally these products are measured at NRB there because the cost price determination of this particular type of inventory might be difficult. Therefore they may be measured at NRB. So if we are measuring such inventory at NRB, then this is outside the scope of this particular accounting standard 2. Got this point? So this may be important for MCQ type of question. They may ask you what are covered, what are not covered under AS2. Now coming to the accounting standard, the meaning of inventory. So what is the meaning of inventories? Inventories are asset. So now you know the meaning of asset. Asset means any resource which are under the control of the entity and which will provide future economic benefit to the entity. Correct? So inventories are asset which are held for sale in the ordinary course of business, which are held for sale in the ordinary course of business, which are held in the process of production and which are held in the form of material or supplies to be consumed in the process of production or rendering of services. Means can I say normally there are two type of organization. One is manufacturing and other is non-manufacturing. Correct? So in case of manufacturing we have finished goods, WIP and raw material. Raw material means can is held for sale in the ordinary course of business, means finished goods held in the process of production but till now production is not completed, we call it WIP, and held in the form of materials or supplies to be consumed in the process of production process, it is known as raw material. Correct? But in case of non-manufacturing, can I say no, basically we are dealing in trading of goods only, so this will be only stock in trade and nothing will be these two. Means that stock in trade, whatever we have purchased, that will be held for sale in the ordinary course of business. Correct? So in case of manufacturing there are three forms of inventory. One is raw material, one is WIP and other is what finished good. But in case of trading organization there will be only stock in trade. Now what is the objective of this chapter? Objective of this chapter is to find out the values of inventory at each balance sheet date. So we value inventory at lower of what? Cost or NRV. NRV means what? The full form is what? Net realizable value. Net realizable value. So cost NRV whichever is lower. Means can you say initial recognition is done at cost? When I am saying this, so when you purchase, suppose this is the initial recognition, you purchase at Y0. So initial recognition will be done at cost price, but subsequent recognition at each year end 1, year end 2, year end 3, if it remain unsold, then we value at cost price or NRB, whichever is lower. Cost price or NRB, whichever is lower. I hope you are understanding. Correct? Yes, sir. Now we need to understand how to find out a cost price and what is the measurement principle of NRB, means how to measure NRB, net realizable value. So to determine the component of cost price, means what is included in cost price, what is not included in cost price, that we need to understand. The cost price, what are included we need to understand, what are excluded from the cost price, that we need to understand. Correct? Now, so what is included in cost price? That the component of cost price, there are three components. One is known as cost of purchase, second is known as cost of conversion, and third is known as other cost. So what are included in cost price? Cost of purchase, cost of conversion, and other cost. When I say cost of purchase, so normally we purchase raw material in case of what? Manufacturing, and stock in trade in case of what? Trading. So when I am saying cost of purchase, that become cost of purchase of raw material in case of manufacturing organization, cost of purchase of stock in trade in case of trading organization. Got this point? Have you understood this point? Yes, sir. So cost of purchase means what? Invoice price less trade discount plus non-refundable duties and taxes. Already we have done this type same thing where in AS10 also. So it is nothing but invoice price minus trade discount or rebate plus non-refundable duties and taxes. Correct? And in this we'll also add all the directly attributable expenses to bring the inventory in present location. To bring the inventory in present location. Location means suppose it is raw, suppose stock in trade, you will bring in warehouse. Correct? Yes, sir. So this become the cost of purchase. So I hope you have understood cost of purchase. So can you repeat with me? Cost of purchase means invoice price minus trade discount plus non-refundable duties and taxes plus direct expenses to bring the inventory in present location. The examples of this directly attributable expenses will be what? Can I say carriage inward, transportation expense? Can I say insurance in transit? Insurance in transit? Can I say loading and unloading charges? Loading, unloading charges. Correct? Any toll tax paid, entry tax paid, if you paid some tax on, if you have paid some tax, or any brokerage on purchase, etc. Suppose you are paying some brokerage on purchase, that will be also added. That will be also added. So these are some examples of directly attributable expenses to bring the inventory in present location. Got this point? This become cost of purchase. Now if it is trading organization, so this become cost price of stock in trade. This become cost price of stock in trade. But if it is manufacturing, so can raw material need to be converted into finished goods, so there will be some cost of conversion also. So in case of manufacturing, we'll add cost of conversion. We'll add cost of conversion. Now this cost of conversion are of two types. One is direct labor, one is production overhead. Can you say now you know about direct material, indirect material, direct labor, direct cost, indirect cost, because now you have done the costing. Correct? Now so direct labor means manufacturing labor, manufacturing wages. So all the direct labor cost will be added. Now production overhead, when I say production overhead, it is nothing but sum total of indirect material, indirect labor and indirect cost of manufacturing. So indirect labor plus indirect material plus indirect manufacturing cost, in total we call it production overhead. In total we call it production overhead. Now production overhead can be variable overhead or it can be fixed overhead. Now if it is variable overhead, it will be allocated to each unit on the basis of actual production. So any variable overhead will be allocated to each unit on the basis of actual production, but fixed overhead will be allocated to each unit on the basis of normal production or actual production, whichever is higher. Remember, fixed overhead will be allocated to each unit on the basis of actual production or normal production, whichever is higher. Normal production means what we can produce in the normal level of efficiency, and what we are actually producing, that become actual production. So fixed overhead will be allocated on the basis of actual production or normal production, whichever is higher. Understood this point? I'll take one question for this, but let us first complete it. Other cost means what? Any expenses to bring the inventory in condition of sale. Means once the production is completed, but can I say right now it is not in condition of sale, because right now some packaging or some more expenses are required to be incurred. So all other expenses which are incurred to bring the inventory in present in the condition of sale, then it will be added as other cost. For example, packing cost, transportation cost from factory to warehouse, modification expenses, some for example some modification required for getting it ready as per the customized specification given by the customer, so that become modification expenses, so that will be also added. So this become the component of cost price. What are the component? Can you repeat with me? Cost of purchase. Cost of purchase means what? Invoice price minus trade discount rebate plus non-refundable duties and taxes plus other directly attributable expenses to bring the inventory in present location. Correct. Second, cost of conversion. It will be direct labor plus production overhead. Production overhead can be variable overhead which will be allocated to each unit on the basis of actual production. Fixed overhead will be allocated to each unit on the basis of actual production or normal production, whichever is higher. Correct. And other cost means what? Expenses which are incurred to bring the inventory in condition for sale. In condition for sale. Correct. Now what is not included in the cost price? What is excluded? So excluded are admin expense. All the admin expenses are excluded unless they are directly attributable to bring the inventory in condition of sale. Means normally if question is silent, always will assume that admin expense are not included in the cost price of inventory, but they are saying that some portion of admin expense can be allocated or can be included in cost price of inventory because they are directly attributable expenses to bring the inventory in condition of sale. Then that will be added. Correct. Selling and distribution expense will not be added. Selling and distribution expense will not be added. Any abnormal loss will not be added. Storage cost will not be added unless it is necessary for the production process. Means if I say storage cost of raw material, so okay, it is necessary for production process, therefore it will be included. But storage cost of finished goods, then it will not be included because that is not necessary for production process when the finished goods are actually produced. Correct. Now so storage cost will not be included unless it is necessary for production process. Borrowing cost, already we have done AS 16. The borrowing cost we have understood that it will be included subject to AS 16. So normally AS 2 is silent regarding this, but it may be included as per the condition given under AS 16. Understood? Excluded? Yes sir. Now there are some special point. Already we have understood that trade discount will be deducted, but any cash discount or settlement discount will not be deducted from the cost price of inventory. So any cash discount or settlement discount will not be deducted. This you have understood. Can you see that will be transferred to PL only when received? So once the cash discount or settlement discount received, it will be transferred to PL as a income. Then one more clarification, that depreciation and amortization expense, depreciation of PP, amortization expense of intangible asset will be included in the cost price of inventory if such assets are directly engaged in the production process. So if I will say depreciation of plant, and that plant we are using a production process, so the depreciation of plant will be included in the cost price of inventory. If I am saying suppose patent and we are using that patent in production process, the amortization of patent will be included in the cost price of inventory. Understood? This fine? Got this fine? This become the discussion about the cost price. Understood? Let me take some question to understand this particular point. Come to this question first. Question number 7. Capital Cable Limited has a normal wastage of 4% in the production process. During the year 2001-2002, the company used 12,000 metric ton or million tons of raw material costing rupees 150 per MT. At the end of the year, 630 MT of wastage was in stock. So you can see out of 12,000, 4% is normal loss. Now you know about normal loss and abnormal loss. So that is 480. And total wastage was 630. Means what is abnormal loss minus 630? That is 150 is abnormal loss. The accountants want to know this wastage is to be treated in the books. Explain in the context of AS2 the treatment of normal loss and abnormal loss, and also find out the amount of abnormal loss. Can you say as per AS2, Abnormal loss will not be included in the cost price of inventory, but normal loss, being normal in nature, will be included in the cost price of inventory. Correct now? Means that will be part of the cost price of inventory, but abnormal loss will not be included. Now, in this case, we need to first find out what is your cost of purchase. So, can you say 12,000 MT into 150? So, what is the cost price? It is 12,000 into, I'll do. So, we'll first find out cost of purchase. So, your cost of purchase will be 12,000 into 150. How much? That is coming 18 lakh. 18 lakh. Understood? Chalega. This is cost of purchase. Can you see in this question cost of purchase is given? If not given, you need to find out. That is nothing but invoice price minus trade discount plus non-refundable duties and taxes plus directly attributable expenses to bring the inventory in present location. So that is nothing but the total has been given here. Now I will find out number of units. Number of units minus normal loss. Normal loss. So again 12,000 minus 480. 480 was the normal loss. So 12,000 minus 480. So 11,520. So this entire cost will be absorbed by this much units. So your cost price per unit will be how much? 18 lakh divided by 11,520. That is coming how much? 18 lakh divided by 11,520. That will come 156.25. Correct? Understood. It means, can I say what is the abnormal loss, value of abnormal loss? It is 120 multiplied by 156.25. So 120 into 156.25, this become 18,750. And this will be charged to profit and loss account. This will be charged to profit and loss account. This is the answer. Chalega. Got this point? Any doubt? Sorry, it is 150, my mistake. Abnormal loss is 150. So 150 into 156.25. So answer become how much? 23,437.5. Got this point? Yes, sir. That is only given. Good question. Can be asked in exam. Can be asked in exam. Okay, sir. Now, one question I will take. I will just try to explain about a fixed overhead. Now, suppose your fixed overhead, case 1, case 2, case 3. Your fixed overhead is 10 lakh. 10 lakh and 10 lakh. This type of question can be asked in exam. In case 1, normal production 10,000, 10,000, 10,000. Actual production 10,000. One minute. Suppose this is 12,500. Suppose this is 8,000. So what is the rule? That it will be allocated whichever is higher, whichever is higher, whichever is higher. So in this case, whichever is higher is what? This, both are higher. In this is higher. In this is higher. So can you say here what is the fixed overhead per unit? In this 10 lakh divided by 10,000 means 100 rupees. Correct now? It become 100 rupees now. 100 rupees. Here 10 lakh divided by 12,500. That become 80 rupees. And here it is 10 lakh divided by 10,000 means 100 rupees. Means in this case, what is the fixed overhead included in cost price. So included in cost price, can 10,000 actual production multiplied by 100, multiplied by 100. So how much included? Entire will be included in cost price. In this case, it will be 12,500 into 80 into 80. So entire will be included in the cost price. But in this case, you can see 8,000 is the actual production, and you'll include 8,000 into 100, means out of 10 lakh, 8 lakh will be included in the cost price. So balance will be known as abnormal loss. Abnormal loss in this case will be nil. In this case it will be nil. It will be 2 lakh. Abnormal loss in this case will be 2 lakh. Means what is the included in cost price? 8 lakh. And how much will be charged to PL? The charge to PL will be 2 lakh. This will be charged to profit and loss account. Correct. Understood. Means can I say due to less efficiency they are actually producing less than normal production. So that may be due to abnormal level of efficiency. So this due to abnormal loss, the amount of 2 lakh will be charged to profit and loss account. Understood? Have you understood? Correct? What is this 20,000, 30,000? Naveen Kumar, what is this 20,000, 30,000? Chalega? This also you have understood. Now let us come to the next point. Now there are some special cases about joint product and byproduct. Now what our AS2 says that if there are some joint product, means in a production process a joint product, more than one main product are produced, then we need to first find out joint cost, and that joint cost should be allocated to each product in the ratio of their sales value at the point of split up. Means when they are splitting at that point of time, what is the sales value, in that ratio it will be allocated. So the joint cost is allocated based on the sales ratio of each joint product, either at the time of split up, either at the time of split up. But if this is not given, first preference will be given. But suppose we are not able to find out sales value of each product at a time of split up, then we'll find out sales value of each product at a time of completion of product. This will be second preference. This will be second preference. So what is the ratio? Ratio will be sales value of each product at the time of split up. If that is not given, then we'll take sales ratio of each joint product at the time of completion of production. Got this fine? Okay. Now byproduct means what? If any product is produced with an insignificant value, means immaterial value, that is known as byproduct. So in the question it will be given that what is byproduct, what is joint product, that you don't worry about that. Correct now. So if the amount is immaterial, means amount of product produced is immaterial, then that will be known as byproduct. Correct. So it must be measured, that byproduct will measure at NRB, will not determine the cost price of byproduct, it will measure at NRB, and that NRB means net realizable value will be deducted from the cost price of main product or cost price of joint, or the joint cost of joint product. Correct? Yes sir. So it must be measured at NRB and deducted from the cost price of main product or joint product. Chalega? I think in the last exam the question was asked from joint product only, and that was in my question bank. Correct now. I think this question was only asked and you are speaking about that only. Correct. I think the similar question I have taken. I think you are talking about this type of question. Means we have done this type of question in our class, and that type of question was asked in exam. I think this question was asked. Correct. Let me take this question. In a manufacturing process of Visual Limited, one of the byproduct emerges beside two main product MP1 and MP2. Apart from scrap, details of the cost of production are as follow. So they are saying there are two main products, means joint product, and one byproduct BP. Item they have given unit amount, raw material 15,000, 1,60,000, wages, fixed overhead, variable overhead. Then output they are saying MP1 6250, MP2 5,000, and BP is 1,600. Closing stock is given 800 and 200. Average market price of MP1 and MP2 is given 80 and 50 per unit respectively. Byproduct is sold at 25 per unit. There is a profit of rupees 5,000 sale of byproduct after incurring separate processing charges of 4,000 and packing charges of 6,000. 6,000 was realized from the sale of scrap. Calculate the value of closing stock MP1 and MP2 as on 31st March 2012. This is the question. Correct? So okay, first we'll find out joint cost. Joint cost means what? 1,60,000 plus 82 plus 58 plus 40. If nothing is given about normal production, we'll always assume normal production and actual production are same and entire fixed overhead will be included. So if nothing is given, always assume normal production is equal to actual production if normal production information is not given. So can I say in this question we'll assume entire fixed overhead will be included in the cost price of inventory. Correct? Understood this point? So can I say your joint cost initially will be 1,60,000 plus 82 plus 58 plus 40, that is coming 3,40,000. Okay, so from this we'll deduct NRV of byproduct because byproduct is measured at NRV. So we need to first find out NRV. NRV means what? Estimated selling price minus estimated selling expense. Means at what price it can be sold, and if you sell it, how much expense will be incurred on sale. So can you see they have given that each byproduct can be sold at 25 per unit. So 1,600 multiplied by 25, that become estimated sale price minus selling expense. Also they have given कि after incurring a processing charge of 4,000 and packing charge of 6,000. So we'll deduct that. So can you say NRB of byproduct you can calculate, that is 1,625, that is 40,000 minus processing charges minus packing charges, that become the NRB of byproduct, and this NRB of byproduct will be deducted from the cost price of main product or joint product. Similarly, the scrap material, the accounting treatment of scrap material and byproduct are same. So they have given the realizable value of scrap material also 6,000, that is also deducted from the cost price of main product. So this 6,000, the realizable value will be also deducted from this. You can see the sale value of scrap, that will be also deducted. So 36,000 deducted, and this become the total joint cost 3,04,000. And now this will be allocated to MP1 and MP2 in the ratio of their sales value, in the ratio of sales value. So what is the output given? MP1 this output is given, MP2 5,000 units output has been given, and the sale price has been given how much? 80 and 50. So we'll multiply with 80 and 50. So this becomes sales value of MP1, sales value of MP2. The ratio of allocation become 2:1. So this joint cost will be allocated to each joint product in the ratio of 2:1, and this become the cost price of MP1, this become the total cost price of MP2. Now we know the output divide by output, so we'll get the cost price per unit. So if you divide by output means this divide by 6250 and this divided by 5,000, will get cost price per unit. Correct? Now we know the closing stock unit has been given. What is the unit given? 800, 200. So if you multiply 800 and 200 with the respective cost price per unit, will get the value of closing stock. This was the objective of this particular question. Understood? Have you understood this point? Can you say cost price should be also compared with NRB? So NRB is nothing but sale price. In this question, sale price is more than cost price. Therefore, we have taken lower. So of course, this will be lower of cost price or NRB, lower of cost price and NRB. Chalega? Understood? Have you understood this particular question? Simple. Chalo. So this also you have understood. Now let us come to NRB. So how to find out NRB? So NRB is very simple. So for finished goods or stock in trade, because they are held for sale in the ordinary course of business, NRB means estimated selling price minus estimated selling expense. So this will be NRB. So that will be given the question, we can find out. Suppose the selling price estimated is 100 and to make sale you are paying commission of 10. So your 90 become NRB. NRB become 90. Compare with the cost price, the value will come. Now for WIP, work in progress, because can you say we still work in progress, so there are some cost to be incurred to complete the production. So in that case, can you say first we'll find out NRB of finished goods. Means can you say we can't find out the sale price of WIP because we are not here to sell WIP. Then first we'll estimate a sale price of finished goods which can be sold from this WIP. So we'll find out estimated selling price of finished goods minus estimated selling expense of finished goods. This will become NRB of finished goods. correct? But can I say still there are some costs to be incurred? So from this we'll deduct estimated cost to complete the production process. So estimated cost to complete deducted, and this will become NRB of WIP. This will become NRB of WIP. So first we need to find out NRB of finished goods, which will be produced from that WIP, and from that you deduct the estimated cost to complete whatever given the question, that will be become NRB of WIP. Understood? Let me take one question based on this. Means question of this nature may be asked in exam. This is question number 1. Come to question number 1. What is given? Cost of partly finished, partly means WIP, at the end is 150. The cost price is given. The unit can be finished next year by further expenditure of 100. This become cost to complete. The finished unit can be sold at 250 estimated sale price, subject to a payment of 4% brokerage on selling price. Assume that partly finished unit cannot be sold in semi-finished form and NRB is 0 without processing it further. The firm seeks your advice. This is totally bakwas. This ignore. This is totally bakwas. So this particular point is totally bakwas. Okay, assuming that partly finished unit cannot be sold in semi-finished form and NRB 0 without processing it further. So of course we'll process it. Why will not process it? Correct now. If you are not processing, then NRB of WIP 0. So in that case, in this way we don't find out NRB. So don't write down NRB 0. This has been given only to confuse you. Only to confuse you. Correct? In this case, how to find out? So first you need to find out what? The sale price of finished good 250. From this you will deduct what? 4% brokerage. So 250 into 4%, how much? So 10 you will deduct. This become 240. And what is the estimated cost to complete? 100. So NRB become 140. This become NRB of WIP. And what is the cost price? Cost price become 150. Correct? So whichever lower, the value become what? This or this, which lower, means 140 is the value. Therefore the loss, expected loss is what? 10, and that will be written down. So you need to write down the value of WIP by rupees 10, by rupees 10. So 150 will be written down by rupees 10 and it will become 140. Understood? Correct? Yes sir. This also you have understood. Chalega? Yes sir. Now coming to raw material, ki how to find out NRB of raw material. Once again, can I say we cannot, because we don't say raw material, so we cannot estimate the NRB of raw material. In that case, what AS2 says that you need to first find out the finished goods which will be produced from the raw material. Correct now? The finished goods in which raw material will be incorporated is expected to be sold at profit. Means whether it is expected sold at more than or equal to their cost price. Means if the finished goods are expected to sold at profit, so can you say then there is no expected loss. In that case, raw materials will be valued at cost price only. So in that case, value raw material at cost price of raw material. Correct? Means can I say in this way, if the cost price of finished goods, if the NRB, we can say if the NRB of finished goods is more than cost price, NRB of finished goods I am saying, if the NRB of finished goods is more than their cost price, means there is an expected profit. There is an expected profit. In this case, we should value raw material at cost price. In this case, value raw material at cost price. But if the NRB of finished goods is less than cost price, means there is an expected loss. If there is an expected loss, in this case, we will value raw material at lower of cost price or replacement cost. Correct? So it means we need to value raw material at lower of its cost price and its replacement cost. Replacement cost means what? Current purchase price. At what price it can be purchased today. So current purchase price is known as what? Replacement cost. So replacement cost will be given the question, don't worry. So we need to find out cost price or replacement cost, whichever is lower. In which case, when the finished goods which are expected to be produced from the raw material are expected to be sold at loss, means in that case the sale price of that finished goods is less than the cost price of finished goods. Understood? Have you understood? Let me take one question based on this. You will be able to understand. This question 16. Calculate the value of raw material and the closing stock based on the following information. Raw material closing balance 500 units they have given. Correct? Cost price including excise duty 200. Excise duty sent by credit is receivable on the excise duty paid. So excise duty is standby credit is available, means it is recoverable. It is recoverable. So it means you will do 200 minus 10, it will become 190. 190. Correct? Understood. Freight inward will be added. Unloading charges will be added. Replacement cost they have given 150. Correct. Finished goods Y. Closing balance is what? 1200 units. 1200 units. Material consumed is 220. 220. Direct labor 60. Direct overhead 40. You can see what is this coming? 190 plus 20 plus 10. Means this is coming 220 only. So 220 is nothing but cost price of raw material, and that is only given. Material consumed is 220. Correct? Direct labor, direct overhead. Total fixed overhead for the year is 2 lakh on a normal capacity of 20,000. On a normal capacity of 20,000. Correct now. So in this case, can I say we'll assume कि actual production, normal production will be same. So 2 lakh divided by 20,000 will be how much? That is what? 10. So 10 will be also included. So fixed overhead will be included how much? 10. Understood? Correct. Now in this case, can I say first we'll find out raw material X, what is the cost price? So cost price 220. Already we calculated. Then we'll find out finished goods, what is the cost price? So material consumed, direct labor, direct overhead means variable overhead, then fixed overhead already we calculated, is become 330. This is 330. Now they have given two cases. Calculate the value of closing stock when NRV of finished goods is 400. So NRV, what is the NRV? NRV is 400, and what is the cost price? Is 330. So NRV is more than what? Cost price. So can I say in this case finished goods will be valued at cost price and raw material will be also valued at cost price. Understood? So when NRV is more than NRV of finished goods 400, means NRV is greater than cost price of finished goods, hence raw material and finished goods are to be valued at cost price. Therefore in this case, what is the quantity of raw material? The closing stock was given how much? 500. And what is the closing stock of this finished good? 1200. So you can see 500, 1200. Rate will be what? Equal to cost price. Cost price of raw material is 220. Cost price of finished good is 330. This will be the amount. This will become the value of closing stock. Value of closing stock. Understood? Have you understood? But when NRB, second situation they have given, NRB is what? 300, and which is less than what? 330. In this case, can I say raw material will be valued at cost price or replacement cost, whichever lower, and finished goods will be valued at cost price NRB, whichever is lower. So in this case, can I say cost, this remains same. Here cost price was how much? 220. NRB was how much? 150. So valuation will be done at 150. Here the cost price was 330. NRB was how much? NRB was how much? 300. So lower is what? 300. So valuation will be done at 300. So 500 multiplied by 150 and 1200 multiplied by 300. This become the value of closing stock. Understood? Simple. Good question can be asked in exam. This can be asked in exam. Good question. I hope you have understood this point. Any doubt? Any doubt about this? Correct. One more question if you want, I can take. Question 19. Question 19. You can see opening stock has been given finished goods 1000, raw material 1100. Opening stock amount has been given. Then purchase. This is the cost of purchase. We purchase raw material. This is purchase of raw material. Na? Purchase of raw material 1 lakh. Labor, fixed overhead 75,000. Okay. Sales 10,000. Closing stock they have given this. The expected production for the year is 15,000. Expected production means normal production. Normal production is 15,000 of the finished product. Due to fall in the market demand, the sale price of finished goods was 20 per kg. So this become NRB. This become NRB. And the replacement cost of raw material is 9.5 per kg. So they have given replacement cost per raw material. You are required to calculate a closing stock. So can you say first we'll find out the cost price of finished goods. Cost price of finished goods. So we'll find out cost of purchase. So okay, cost of purchase means cost of material consumed. So how much material consumed during the year. So we'll first find out this is the opening stock plus purchase and then minus closing stock. Correct now. So first we'll find out what is the cost price of raw material consumed. So cost price of raw material consumed will be how much? Just try to understand what I am saying. This will be opening stock. Opening stock how much? Can I say this is 1100, then plus purchase, then minus closing stock. How much it is coming? 1100 plus purchase means 10,000 minus 900 means how much? 10,200. So this will come 10,200. 10,200. Can you say multiply by cost price per unit? So can you say cost price per unit can be calculated either by using FIFO, first in first out method, or weighted average price method. Correct now. That is the cost formula. In this nothing has been given, so you can use either FIFO or weighted average price method. You can see the opening stock, this was rupees 10 per unit, 11,000 divided by 1100, and the purchase is also 10 rupees per unit. So can you say because both are same, FIFO will also give the same answer and weighted average price also will give same method, same answer, because both are same. So can you say the cost price per unit rupees 10 only is rupees 10 only. But can you say if they are different, then you have to understand the FIFO method and weighted average price method. Understood? So this is into 10. So this become the cost of purchase. Cost of purchase. Have you understood this point? 1,02,000. 1,02,000. Then in this you will add what? Direct labor. Direct labor is 76,500. Then you will add fixed overhead, but fixed overhead will be based on actual production or normal production, whichever higher. Can I say here the production is what? 10,200. 10,200 will assume that each unit will produce each one production means 1 unit of raw material will produce 1 unit of finished product. That is only the assumption. Correct now. 10,200 and normal production is 15,000. So we'll take higher one, so it will be 15,000. So can I say it will become how much? 75,000. 75,000 divided by 15,000. So what is the cost price per unit? So 75,000 divided by 15,000. Case become 5 rupees per unit, multiply by actual production. So you will do 10,200 multiplied by 5, and the balance will be charged to profit and loss account. The balance fixed overhead which are not absorbed under the cost price of inventory, that will become abnormal loss and charged to profit and loss account. So this will be 10,200 multiplied by 5, that is 51,000. I hope you have understood this also. So this become total cost of production divided by actual production. Actual production is 10,200. So can you see you will do divide by 10,200 and that will be 22.5. NRB is given 20. So in this case, can I say will evaluate cost price NRB which is lower, so we'll take lower only 20. Now because NRB is less than what? Cost price. So can I say value of raw material will be at cost price or replacement cost, whichever lower. So you can see for finished goods they have taken what? 1,200 into 20, because 1,200 is a closing stock, and for this they have taken replacement cost. Replacement cost is what? 9.5. So this become the value of total closing stock. Understood? This type of question can be asked. Super question. Have you understood this particular point? Bolo. चलेगा? Have you understood? Okay, sir. Chalo. This also you have understood. Now coming to cost formula. Coming to cost formula. The cost formula depends upon what is the nature of inventory. So there are two type of inventory nature. First is inventory which are not ordinary interchangeable, means they are not homogeneous. Not homogeneous means these are not similar units. Normally these are basically expensive inventory. Expensive item. Correct. For example, if I say jewelry or any customized product, etc. So in that case, will not apply average method. So whenever inventories which are not ordinary interchangeable will find out cost price of each unit separately, and therefore the method is known as specific identification method. We call it specific identification method. So we need to identify the cost of each unit and then calculate the cost price of that unit. So normally we follow unit costing for that. चलेगा. So whenever inventories are not ordinary interchangeable, we apply specific identification method. However, inventory which are ordinary interchangeable means one unit can be interchanged from other unit. For example, if I am producing calculator, so can say calculator will purchase in bulk and one calculator will be similar to another calculator. So it means they are ordinary interchangeable. In that case, there are two things. Either you can use historical cost method or you can use non-historical cost method. Historical cost method means what? Actual cost can be determined. Means we can find out actual cost. So whenever we can find out actual cost, we apply two cost formula. One is known as first in first out method and second is known as weighted average price method. First in first out method, first in first out method. I hope you know about first in first out method. Means the item which is purchased first will be sold first. Therefore closing stock will be from the recent item purchase. And in case of weighted average, what we do? We do multiplication of cost price multiply by number of units, and then we calculate weighted average cost price first. For example, weighted average price means what? For example, you purchase 100 units into 10, so that become 1000. Then again you purchase 200 units at rupees 15, so that become 3000. Total become 4000. This is 300. So what is the average price? Average price will be 4000 divided by 300. This become how much? 4000 divided by 300. So average price become 13.33. This is known as weighted average cost price method. Weighted average cost price method. चलेगा. So whenever we apply actual cost means whenever we calculate actual cost means we apply historical cost method. Then two formula is there: first in first out method and weighted average price method. Now LIFO is not acceptable as per AS2. So LIFO is not permissible as per AS2. Correct. Now sometime what happen, actual cost cannot be determined. Then we calculate approximate cost. So whenever actual cost cannot be determined, then we apply non-historical cost method. So they have given two techniques for inventory valuation. In that case, for retail, for the trading organization, they have given adjusted selling price method. And for manufacturing, they have given standard costing method. Means for manufacturing organization, they have given which technique? Standard costing. And can standard costing you have done in costing only, costing subject. Therefore in account they will never ask any question of standard costing. For trading organization, they have given which method? Adjusted selling price method, also known as retail price method. So in this case, what we do under adjusted price method or retail price method, what we do? First we find out sale price of closing stock. Sale price of closing stock means what? Units of closing stock multiplied by sale price given in the question. And from this sale price of closing stock, we deduct profit margin whatever given in the question. Suppose they have given 20% profit margin. So from sale price we deduct 20% profit margin. And can I say that will be the cost price of closing stock? So this is the indirect way to calculate cost price. Calculate cost price. So sale price of closing stock minus profit margin. Understood? Have you understood this point? बोलिए. Any doubt? So this become what? Cost formula. Cost formula you have understood? Correct. Now FIFO weighted average price method, I am assuming that you know and you need to practice by your own. This type of question can be asked in exam, but normally FIFO weighted average price method, normally in CA foundation they used to ask. So we expect that in CA inter they may not ask this type of question. May not ask. Chalega. Then comparison of NRB and cost price. So comparison will be always done on item by item basis. Means each item at the end of each year, for each item we'll compare cost price and NRB separately. So we don't do on total basis. For example, we have A, B, C. So for each item we compare cost price or NRB separately. Chalega. Then review of NRB at each balance sheet date. Can you see if it remain unsold at each balance sheet date? So we need to reassess the value of NRB and they can be increase or decrease in the NRB. So we need to do an assessment is made. Means an assessment is made of NRB at each balance sheet date. At each balance sheet we review NRB. Chalega. Yes, sir. Disclosure you can do by your own. So with this AS2 is completed. AS2 is completed. Now we need to take only the balance question. So let us take the balance question. Come to question number 20. A Limited is engaged in the manufacturing of chemical Y for which raw material X is required. The company provide you the following information for the year ended 31st March 2020. Cost price of raw material, freight inward, replacement cost. Means the total cost become 440. Chemical Y, you can see chemical Y is the finished product. So material consumed is 440, correct? Direct labor 120, variable overhead 80. Additional information, total fixed overhead for the year is 4 lakh. On normal capacity is 25,000. So 4 lakh divided by 25,000, it will become 16. So you add 16 यहाँ पर, this become 440 plus 120 plus 80. 440 plus 120 plus 80 plus 16, that becomes 656. Now closing balance of raw material is 1000 and chemical is 2400. You are required to calculate the total value of closing stock of raw material X and Y. If the NRB is 600, you can see NRB is 600. So NRB is less than cost price. Therefore, we need to value raw material at cost price or replacement cost, whichever is lower. So you can see 440 and 320. It will take 320 and for this will take 600. This is the answer. That is only given. देखो 1000 multiplied by 320, that is replacement cost. 2400 multiplied by 610, that is NRB. This is the answer. This is the working note. This type of question are most predicted question in exam. I will say very important question from exam point of view. Already I have done similar question. I have done 2 questions so that you can understand. Come to one more question, question number 12. An entity ordered 13,000 kg of certain material at rupees 90 per unit. The purchase price include excise duty of 5 per kg in respect of which credit is admissible. Means it is become refundable. It become refundable. Now they may give GST instead of excise duty. Chalega. Freight incurred amounted rupees 8,600. Normal transit loss is 4%. The entity actually received 12,400 kg and consumed 10,000 kg. Calculate the cost price of inventory. Now just try to understand. 13,000 kg was purchased, but they received 12,400. Means what is the loss? Loss is 600. And they are saying that 4% is normal loss. So 13,000 into 4% is 520. So 520 is normal loss. The total loss is 600. So 80 is abnormal loss. So first we need to find out the cost of purchase. The cost of purchase 13,000 into 90. So this become the purchase price. From this case we deduct excise duty because excise duty was included in this. So excise duty will be 13,000 to 5. That we deducted. That become 11 lakh 5,000. In this we will add transportation cost 80,600. This become the cost of purchase. Cost of purchase is given. Now cost of purchase divided by the number of units after normal loss. So normal loss means 13,000 minus what? 520. This coming 12,480. So 12,000 is the balance unit after normal loss. So that become 12,480. This become 95 rupees per unit. So what is the cost price per unit is 95. It means can I say abnormal loss is what? 80. 80 into 95. This become value of amount of abnormal loss which will be charged to profit and loss account. Correct. And they have said that they have already consumed 10,000. They have already consumed 10,000 out of 12,400 whatever received. So what is the closing stock? 2,400. So 2,400 into 95, that become the cost price of inventory. This is the answer. You can do it now. Chalega. This also done. 12 also done. I think all the question I have taken. So you can see AS2 is completed from my point of view. These are all expected question also I have done. Chalega. Now let us come to AS1. AS1 is very simple. AS1 only I will revise the content. AS1. So AS1 is what? What is AS1? Disclosure of accounting policy. AS1 disclosure of accounting policy. What is the meaning of accounting policy? Accounting policy means the specific accounting principle and the method of applying this principle adopted by entity in the preparation and presentation of financial statement. So accounting principle and accounting method. For example, we have done inventory. So what is the principle? Principle is cost price or NRB, whichever is lower. This is the principle. And can you see we have adopted cost formula to apply this principle? For example, LIFO, for example, FIFO, not LIFO, weighted average price method. This become cost formula, means method of applying this principle. So this is also accounting policy. So accounting policy refers to a specific accounting principle and method of applying this principle in the preparation and presentation of financial statement. Correct. Now, in preparation of financial statement, there are three fundamental accounting assumptions. Three fundamental accounting assumptions. So what are three fundamental accounting assumptions? Going concern, consistency, accrual. Accrual concept. You know going concern, you know consistency, you know accrual. Now, what AS1 says that if the fundamental accounting assumptions are followed, means if you are following going concern, if you are following accrual, if you are following consistency, then no disclosures are required. But if you are not following, the fact need to be disclosed that you are not following going concern, you are not following consistency, you are not following accrual concept. The disclosure required in the financial statement. Correct. Now going concern, I hope you know consistency, you know accrual. Going concern means what? Entity is normally viewed as a going concern, means it means entity is continuing in operation for the foreseeable future and they have no intention nor the necessary to liquidate or has no realistic alternative to do so, means they don't have any other option. Correct. Understood. Now means they has no intention to curtail their operation, so this become going concern. Okay. Consistency you do, accrual you do, you know about this. Now selection of accounting policy. So how to select our accounting policy? So whenever we select our accounting policy, the selection depends upon one primary consideration. Primary consideration is true and fair view, means whatever accounting policy we are selecting, that must give true and fair view to financial statement. If they are giving true and fair view to financial statement, means the selection is appropriate. The major consideration is based on prudence. Prudence means nothing but that whatever there is a expected loss, we should provide for and we should not anticipate any expected income. That is nothing but prudence. Prudence is nothing but, I will say, conservatism is an example of prudence. Correct. Substance over form. Substance over form means whatever accounting treatment we are doing, that is should be based on substance over transaction, not based on legal document. Means we should always give more importance to reality of the transaction over legality of the transaction. Correct. Now, so reality will be given more importance than the legality of the transaction. Correct. And the materiality, of course we have understood that we should always give more importance to the material information, not to the immaterial information. So AS will be applied only to material information, not to the immaterial information. Correct. These are some you can read by your own. This I will not do in detail together. Now coming to manner of disclosure. So what AS1 says that all significant accounting policy adopted in the preparation and presentation of financial statements should be disclosed. So all accounting policies should be disclosed, and whatever disclosure you are doing, that should form part of what? So should form part of financial statement. Mean disclosure of significant accounting policy as such should form part of financial statement and should normally be disclosed at one place. Means whatever disclosure you are doing, this should form part of financial statement and should be disclosed at one place. One place means what? In notes to account. In notes to account. So all disclosure we give in notes to account. Chalega. Chalega. Then last point is what? Disclosure of changes in accounting policy. Whenever there is changes in accounting policy, AS1 says that we should disclose some information about the changes in accounting policy. So whenever there is changes in accounting policy has a material effect in the current period, means you have done some changes in accounting policy and that has material effect in the current period, so amount should be ascertained and the amount should be disclosed. But if the amount is not ascertained, the fact need to be disclosed that we are not able to estimate the amount. But if the changes in accounting policy will be expected to have material effect in the later period, means in the future period it will have some material effect, then fact of such changes to be disclosed in the current period, in the period of change. Correct. Means if I read any change in accounting policy which has a material effect in the current period or in the later period should be disclosed. In the case of changes in accounting policy which has material effect in the period, the amount by which the item is affected by such change should be also disclosed to the extent determinable. If the amount is not determinable, the fact should be included in the notes to account. Chalega. This become AS1. AS1 you can do by your own. There are two questions I have given in expected question, that also you read by your own. So AS1 I will not discuss in detail, because normally from AS1 they don't ask question but can be asked. Correct. Now just read by your own. Very small accounting standard. I hope you know about accounting standard 1. Correct. So today we have completed cash flow statement, we have completed AS2, we have completed AS1. Correct? Understood? Chalega? So I will just say you that I will upload the test number 1 in the my Google Drive link, and the link of that Google Drive link you will find in the Telegram channel. Do join the Telegram channel. First complete the entire question of the question bank, whatever you are following. First complete, then write down the test. I have taken some good question, nothing to worry about that. And suggested solution is given. Once you have written the test, just analyze where you have done mistake. Don't panic if you are not able to write it. Don't panic, just try to find out where you have done mistake and try to rectify it. Okay, sir. Thank you very much for today. We'll meet tomorrow. Tomorrow we'll be doing which accounting standard? Let's see. So tomorrow, what is our plan? So tomorrow we'll be doing what? Tomorrow we'll do buyback of shares, internal reconstruction chapter, and AS4. So 3 chapters: buyback of shares, internal reconstruction chapter, and accounting standard 4. This will be our target for day number 3. Bye bye. All the best for preparation. Thank you very much. Meet soon in the tomorrow's class. Till then, bye bye. Take care. Bye bye.